What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Good morning, everybody. Welcome back to another live stream and today's CPI report, which is expected to rattle markets one way or the other. Not that they need rattling. The stock market's lower here the last few days. Nasdaq actually down again today, 1.6%. The S&P 500 down about 0.9%. And the Dow Jones also down 0.7%. Russell's down there as well, minus 0.84%. So we have some broad-based selling going on, as it does look like escalations in the Middle East are kind of, happening. Like we're unwinding a little bit. There was a Truth Social post by the president this morning, basically saying that Iran took too long to make a deal. I mean, you've got a resumption, essentially, of hostilities and uncertainties in the Middle East. And it looks like the towel, it basically looks like ceasefire's off. So where do we go with that? Well, I'm actually kind of shocked to see oil not up more than what it is. While I don't have any current positions on oil, my silver trade is absolutely going nuts here. Trade is now floating over $20,000 in P&L. We essentially yesterday we fell apart in the silver trade, broke through the lows, and have really seen no meaningfully held bounce. Sellers are just in full control right now. We will see where this wants to go, but CPI, of course, could change everything. Today's CPI number is expected to be 4.2% year-on-year inflation. Now, why is the market selling off before we even get this figure? Well, because the Middle East stuff pretty much confirms that even if this inflation number comes in at 4.2 or even 4.1 or 4, we're looking forward and we're seeing in our front windshield, we see escalation in the Middle East happening again. We know that is a huge driver of energy prices higher, and we know that uncertainty could send inflation up to the 5s. Like you could see significant surges in inflation from here. So why is everything selling off before CPI? Because we're looking at next month's CPI right now. The month after that's CPI. We're looking at inflation not for today's number, which is, of course, also important, but arguably with this new headline, what's more important is next month's CPI report, because now we might be going into another few weeks of escalation. Does that make sense? Guys, as we get started here, we're going to be going through a lot of different charts. We're going to be prepping for CPI, which drops in 10 minutes. If you could do me a huge favor, just hit the thumbs up button, subscribe to the channel, or follow if you're on Twitter. I would greatly appreciate it. Help to get the show out there a little bit more to more traders who are listening in for some insights on what is CPI going to potentially be doing to this market. So again, there is a possibility either direction, right? So if you get 4.2% On the dot, what happens? I think we probably just stay with the status quo, which is gold, silver stocks lower, dollar kind of holds steady, inflation concerns stay elevated. You are seeing yields move higher here a little bit today. They're not super aggressively higher. You've got Bitcoin back down towards its lows. You've got the Nasdaq pressing back down here this morning. S&P 500 as well. These pullbacks, by the way, are still very modest. You're looking at just a 4% pullback in the S&P 500. You're looking at about a 7% pullback in the Nasdaq. And so what could put some heat on these movers? Well, I'll tell you what it would be. It would be a hot CPI inflation report. Like if you get a really hot CPI print, which worries markets further, yeah, you could be seeing some fresh lows. You could see very easily, I would argue, if you get a 4.4, if you get 4.5 CPI today, I think you probably do go see those lows. Now, if this number comes in better than expected, you may actually hold this area. Like we may catch a bounce that can last. The last few days, we had a bounce that was essentially toppled over by new geopolitical headlines. So what you certainly don't want to see if you're a bull is a hot CPI print on top of escalations, because that's just inflation city, right? If you have escalations, like things are going to get worse and inflation reports come in even hotter than they were anticipated to be, suddenly it's like, okay, no bueno. Like we could see stocks pull back in a more meaningful way. We also have the SpaceX stuff, which I think is worth mentioning because I think that there's a bit of a, I think that, there's a lot of investors that want to buy the SpaceX IPO. And what are they doing in order to buy the SpaceX IPO? They're raising cash. What are they doing? They're selling stocks. So I think that the bull case would be there's just a bit of profit taking in order to prep for SpaceX. That would be like the bull case and all of that. But I'm a little bit more on the cautious side right now, if you can't already tell. Like I said, I am still short precious metals. These have been monster, or specifically silver. This has been a monster trade for me. I'm just managing this position from here. I am looking for any sort of structural resistance to further trail my stop loss into profit. I'm watching this area. I would like to see some kind of consolidation here before I look for another opportunity to trail that stop loss, but I am looking to do so. This will be the third time that I trail my stop loss on this winning position, and we are looking pretty here. We've got 6 or about 7 minutes to go here before the report. Again, into the print, we have Nasdaq moving lower off of geopolitical headlines. The dollar index is still holding its gains pretty decently well. I am also simultaneously long UUP, which is an ETF that tracks the DXY. So you can see there is my position on the dollar. So up about 25,000 on both of these positions. I will leave these live if I give back some gains today on CPI. I'm going to show that on camera. I'm not going to hide it or shy away from it. These are my trades. I'm not certain on where markets go ever. I am a educational or educated guess with risk management based trader. I don't know with certainty where CPI is going to go. You're going to have lots of people tell you sell gold, buy gold, sell NAS, buy NAS, claiming they know what CPI is going to do. I don't know what CPI is going to do. I'm going to react and build a macro bias based on what we get on that front. So specifically, like CPI, PPI last time around were very hot prints for the US. So let me show you this really quick. I'm going to switch over to our, where am I looking for? I'm looking for US dollar. Okay, so if I look at the dollar, part of the reason I've been so bullish on the dollar specifically has been inflation last time around. Producer price index and consumer price index were both higher than expected, with producer price index having a meaningfully higher surprise. Is that are producer prices going to make their way into consumer prices today? That is the question mark that I think is why you have such a potentially volatile event coming here in just about 5 minutes. Meanwhile, the 2-year yield, 10-year yield, these things are in uptrends. That is a bear pressure for stocks in gold and silver, and a bull pressure for the dollar, right? Higher interest rates. That's essentially what that's telling you. The 2-year yield, we monitor it very deliberately for that purpose. We also saw institutions doing some buying on the dollar here recently through the commitment of traders data, which our software tracks. And we're going to keep an eye on this because, again, if inflation data comes in way softer today, will I change anything in my positions deliberately and right away? No, but it may stop me from taking additional trades because right now I have a lot of synergy on my macroeconomic scores. If CPI and PPI come in cooler than expected, there's no ego attached to it. There is no bias attached to it. I have a mathematic formula here, essentially factoring in automatically what these new data points will look like to build a comprehensive bias on the fundamental macro side. What I'm saying here, if CPI comes in cooler than expected, 4.2% is anticipated numbers today, that's not going to get me to outright bail on the dollar bullish story, but it will tweak my bias slightly more negatively to the point that if it loses its bullish rating within EdgeFinder, I won't be looking for new long trades, and I'll just manage the existing ones that I have, aka short pound dollar, short silver, and long UUP or US dollar DXY. Those are my current positions going into this event. I will keep my P&L on the screen. You can watch me either give back a bunch of gains really quickly or gain a bunch, but ultimately I am a swing trader. I'm not scalping or day trading this event. These are trades that I've had on for a week or so, and I continue to hold on to. Pound dollar shorts I've been in for like 3 weeks. So I'm not a scalper or a short-term trader, although I understand the P&L swings can be fun to watch. So we'll see. We've got about 2.5 minutes to go. What I'm going to do here is I'm going to switch over our view, guys, so we can see everything at once. And I'm going to leave the silver trade because it's the more interesting one. DXY is just a much slower mover. So let's look at silver. So we've got silver's P&L on the screen. What I'll do is I'll put it right here so we can keep an eye on it. So again, if the consumer price index comes in lower than anticipated, likely this trade is going to worsen because, of course, silver would likely rally on that number, and vice versa. So I have no idea with what the number will be. You might say, well, isn't that gambling? Well, not really, because I'm looking at the general macro directional trends of inflation, which have been up, and I'm making the educated guess that I think inflation will stay sticky, if not meet expectations, maybe slightly beat them. And if I'm wrong, then I will manage my positions accordingly. No one knows with certainty where price or economic data is going to go. We make educated guesses, and all you can do as traders is manage your risk in the meantime. I'm also, for context, trading on a large trading account. It is a $1.4 million account. So please understand, this is not, the account getting blown if this goes poorly. It's a very small risk on the overall portfolio. As we count down here, if you guys could do me a favor, hit the thumbs up button, subscribe, all that good stuff. And I believe Chris Pulver will be joining us for some post-CPI conversation on what this means for markets. Again, geopolitics are still very, very much alive and well in the Middle East. Unfortunately, things look like they are problematic for the silver trade. That is a positive thing in the sense that silver is negatively reacting. Gold is negatively reacting to higher oil prices and anticipated inflation. Yields, rates moving higher. We'll keep an eye on how that impacts the charts. We've got about 30 seconds to go, guys. On the screen, you've got 1-hour charts for the S&P, the Nasdaq, gold, silver, oil, dollar, Bitcoin, and the Dow, all on the screen so that we can watch the price reaction. Like I said, if you could hit the thumbs up button, subscribe, all that good stuff, that'll be great. Don't go anywhere after the release. After the release is when things get interesting, because that's where we actually can build a bias and look for trading opportunities post CPI report once we get some price movement and some trends potentially forming. 5 seconds to go. Let's see what the CPI print brings us this morning. Okay. Initial reaction is dollar is moving lower, silver moving higher, gold moving higher, NAS moving higher. Although these aren't big moves, this kind of makes me feel like it is a met expectations or slightly better than expected. 4.2 CPI. Okay. Yeah. So CPI came in line with expectations. Yep. CPI in line with expectations. So nothing wildly exciting there. And so I think that, okay, yeah, core CPI came in a little bit lower than expected. Year over year came in line. CPI month over month and CPI year over year came in line with expectations. So no massive shock or surprise there on the CPI report today. It did show signs of increasing inflation, right? This is a higher inflation print than previous, but still at that kind of notion, you still have high inflation, higher than previous, though it did not blow out. So in that regards, where does that leave us? Well, you can kind of see a muted price action response. That being said, we have new information this morning with the Middle East stuff kind of resuming. That kind of leans more on the direction of more inflation is likely coming down the pipeline. Now, tomorrow we also have the producer price index, which will also be very interesting to see. Last time around, the producer price index blew out like it was the big shocker, right? So if we go take a look at our heat map for a second, last time around, the producer price index shook markets with a 1.1% higher than anticipated year over year print. So will we get more of that on the producer side, the wholesale prices up the supply chain? Because that we know typically makes its way into the consumer price index around 2 months after. So, last month we got that. So we're kind of expecting the next few CPI reports to kind of, come in line with that. So anyways, in just a second, we'll bring in Chris Pulver to the conversation, see what he has to say. By the way, guys, all trades that I am taking are currently available inside of our VIP Discord. If that's something that you're interested in joining, like this silver trade, every trade that I take is transparently shared with VIP members. You get access to every position, entries, exits, analysis, breakdown for why the trade was taking, screenshots of the trades, etc., with full transparency. If that is something that you're interested in taking advantage of, like I said, you can sign up for our VIP group on the website, a1trading.com, or click the link that's just been dropped in the live stream chat to chat directly with a member of our support team about setting up a payment plan or getting access, whatever fits you well. Of course, we also offer the Pulver alerts where you can see trades taken by my friend Chris Pulver, who has just joined. Good morning, Chris. How are you, man?
What's up, Nick? Happy CPI day.
Happy CPI day, guys. We've got 850 people hanging out with us this morning. Good to see everybody. Thank you for being here on this lovely CPI day. Chris, I saw you just put in the chat. Came in perfectly in line with expectations, 4.2% year over year, and core was also in line as well.
Yes, and so really no surprise outside of the monthly came in 0.2 versus forecasted 0.3, but it was 4.2 as the CPI. So now it's the market's reaction to headline, right? Headline, oh my gosh, we have 4.2% inflation. Look, we've seen yesterday was one of the wildest intraday moves I've seen in a long time. We were up over 1% in the morning, dropped over 3%, rallied over 2% all in the same day. That was head spinning volatility. So I have some symmetry that I think could be interesting. So I'm looking at the futures market. There's two ways I can take this trade. One is either I look at a trade that gives me, this would be a tail credit if price goes lower, a little dead zone I'm trying to cover with volatility, and then unlimited upside, or I can flip that and go tail credit this way, dead zone, and then unlimited downside. Now, Nick, after having a gargantuan sell-off on Friday, and somehow even putting that to shame with that was a 2% sell-off on Friday. It was 3+% intraday yesterday. We're still not to symmetry yet. So I think getting a move down on futures at 72.15 is doable. Question, of course, is it today this happens? Is this tomorrow? Is it, how's the market going to look? CPI and PPI and SpaceX IPO in 3 days. It's like, this is like Lions, Tigers, and Bears, man. It's an oh my week of trading.
I got to say, yes, that move yesterday was wild, given that you kind of started out the day looking like, okay, it's going to be another one of these kind of bull market that we've been in type environments where the sell-offs are so brief, you can hardly gather your belongings before it's back to the highs. Like it's so quick. And so, it started out the day like that. But I did a quick little thing. I talked about it in my video yesterday. just a quick little Fibonacci retracement. Both days, or on Monday, we failed to hold the 50% retracement of the move on Friday. Then on Tuesday, ultimately, we tried and once again failed to make gains or hold gains above the 50% retracement of the move on Friday. So we followed through. We now have a catalyst that I think kind of takes priority personally over the CPI report even this morning, Chris, which is essentially all bets are off. We're back to square one in the Middle East. And that to me tells me, okay, that's more about inflation tomorrow, which is what the market's more worried about anyways. CPI, yeah, came in 4.2%. That is higher and continues the trend of trending higher in the last few months. But what I would argue is more important here is that if the geopolitical stuff is coming back online, which has been the driver of inflation the last few months, wouldn't it then be fair to say that we could potentially see that number break into like the high fours, even into the 5% on inflation, which might genuinely issue a response from the Fed, which again feels very similar. We've talked about it many times. It feels very similar to the 2021 to 2022 inflation-esque event. Where we had a geopolitical tension, Russia, Ukraine, that really spiked the inflation problem to the point that the Fed had to react quickly. Again, I know a lot of people are like, well, Kevin Warsh is going to rate cut. Well, he has a vote, but so does his committee. And if they think they can't hike rates or they can't cut rates, then they are not going to cut rates and they might have some kind of dissension. So I think personally, I think Kevin Warsh is going to stay loyal to the Fed over Trump. Personally, we'll see.
Yeah. I mean, every central bank right now is looking to raise rates. In fact, we'll find out tomorrow the ECB is looking to raise by 25 basis points. So again, we're finding ourselves in a cycle where the narrative is inflation is higher. Central banks are trying to get ahead of this stuff, not repeat what happened in 2022, the Fed included. I mean, I do think a policy mistake is to do, like, I think a rate cut is a policy mistake. The hard part that the market is juggling with right now is the markets have priced in rate cuts, and we stopped seeing those rate cuts. We had almost 2% of rate cuts on the short end of the curve, and yet our yields are going higher. Markets are still at all-time highs, which is something to celebrate, but it's been kind of wild how we got there. A 9-week win streak to the upside, you know, the 100th percentile of bullishness with that reflexive rally. And now, even yesterday, Nick, 55% of stocks were advancing. It was like the 490 was up and the 10 were down, but you had, you know, more semiconductor pain, more SMH, more AI, more like all the high flyers still giving some back, still rotating, which is what I'm kind of taking out of this current environment is volatility is up. It feels pretty ugly with a couple of nasty days. Volatility clusters are very real. When you get these like 2 to 3 standard deviation moves in a day, that tends to be followed with more like in a cluster of volatility. So I would be prepared for just more wild and crazy volatility. And like I said, inflation news this week is kind of thrown right in the mix. One of the largest and highly anticipated IPOs in the history of the U.S. markets are coming on Friday with SpaceX. This is a crazy story, but did you see that ProShares is offering a 2x leverage SpaceX ETF the day that it launches? So when SpaceX goes live, there's going to be leverage ETFs right alongside it.
I did see that, and it's
expect volatility, man.
Yeah, no, I think you know, with the SpaceX stuff we've been talking about a little bit on the stream, I generally am in the camp of standing clear. But Chris, here's a bull case that I've heard that I think is kind of an interesting one, which is the part of the reason that you have had some of the specific to like semiconductors and some of the high flyers, like the tech pullback, has been credited towards people are taking profits out so that they can prepare for the SpaceX thing.
Yep.
I think it's a valid thing to think about. But my bigger concern with the SpaceX thing is just simply we're talking about a $2 trillion valuation, is a massive, massive valuation. Company doesn't make money. You have entities within it that do. Like, I think if you're talking the Starlink, satellite launching stuff, like, that's fantastic. Those are profitable parts of the business. And then you have this big XAI in the middle of it, which bleeds money, which is kind of the theme of a lot of these AI coming online IPOs that we're expecting to see in 2026. So my concern is what's the risk appetite from the market to bring this thing? Like, where is all that capital going to come from? $2 trillion. To me, it's like, okay, the concern is what if that just comes out of Mag 7, comes out of other places that need those funds, that might, potentially, all these companies like Google did a secondary offering, like they're raising cash.
Yeah.
If you get money starting to get pulled from them, does that hurt the story in other ways? I don't know.
Well, I mean, this is what we talked about with the CapEx spending is like it becomes too rich for investors thinking like, where's this return going to go? If this is all it is we're raising capital now, we are, adding debt to the AI build out. And this is like, it's all in. And I mean, it started with Oracle. And now, I mean, Google is like last year, was it last year when like kind of Google dethroned NVIDIA for a moment because it was like TPUs versus GPUs. And Google, has gone to all-time highs and done pretty well. Apple's, back up towards all-time highs, which is impressive as well because they had a nice little launch with. I think that was that a Tim Cook and Trump thing when Apple started to rip at all-time highs? That was lately. But now he's gone, right? Tim Cook's no longer CEO. Is that correct with Apple?
Yeah, that's right. And they announced some Siri AI thing.
Yeah, everyone hates Siri. Like the takeaway from yesterday, right?
Yeah, that was pretty much it. They were like, "You're calling it Siri something." No one.
She's been listening for years, and nobody likes her anymore.
Right.
All right. So back to your question though. So this is what's going to be interesting about the SpaceX, Anthropic, OpenAI. We're talking like $4 trillion potential market cap. The question is there fresh liquidity coming off of the sidelines to chase this stuff, or is it just going to be an insane rotation away from the high flyers? I can see the SMHs of the world, having some near-term pain. Just looking at this recent fib from, February, March's lows into this run, we pulled back 30%. Now, in my experience, a 30% pullback can also be met with a retest of the highs. Now, Nick, with a big directional move like this, we could also go sideways and just have a lot of volatility. But just like we saw in gold and silver, one massive swing could also be met with weeks, if not months of sideways. And so I almost wonder if the crowd is like, we got paid, we're moving on to something else.
Yeah, Chris, I'm still fading the silver move. Again, I am starting to rub my hands together because I'm like, every day that this short position works, I feel like I'm double dipping because I like precious metals long term. So I'm like riding it down. I'm feeling good. I don't know how long it's going to last, but I'm trailing stops on it. The longer precious metals go lower, the happier I am because I ultimately feel comfortable sticking precious metals in my portfolio for the longer term,
right?
Where I don't necessarily feel the same way about everything else right now, especially tech stuff. But like, if gold can break down, you might get this larger scale false breakout type move at 4,100. Like I could see us tagging 4,000, touching into the 3,000s. And to me, Chris, that's like, okay, that actually is an attractive, buyable dip. You're looking at a 30% pullback on precious metals. I still know that, the same story that we have rehearsed a million times on this channel, national debts, uncertainties about currency debasement. And while I think the dollar may continue to outperform against its peers, I'm not trusting of any fiat currency, right? So over the longer stretch, they all lose value, including the dollar. It's just, holding up better against the rest, at least recently. So I'm kind of in the camp of not minding at all if precious metals want to continue to present some dip buying opportunities in the long term.
Yeah, and I mean, dude, kudos to you for the bravery of shorting and then getting paid on that. Because I'm definitely not short. I'm just looking at the higher volatility, the sell off, the higher IV. I'm looking to sell more premium, and I'm still looking to accumulate at key levels. I mean, I'd love to have some. So spot price gold. I mean, this might seem like a low target, but I would be looking at spot price around like 3,500.
Chris,
and that equivalent.
Share your screen. Share your screen so we can see it.
I'm not okay. Jeez, I'm just drawing all these lines and nobody's paying attention.
I was trying to keep up with you. I was trying to draw it for you, but I was like, okay, I need you here.
All right. So I've got the gold chart up, and remember this channel that we've talked about. If it's high, low, high, low, high, low, I mean that gets us to about 3,800. This previous high that's what I said about 3,500 spot price. Nick, if you ride out a trailed stop loss and this thing gets to like 38 or 3,400. Dude, awesome trade for you. I'm going to be right there on the opposing side, which is when this comes down low enough, if it comes down low enough, this is just going to be where I'm sitting here ready to accumulate.
Yeah.
And it might be it might feel like a bit of a pain trade because it's like you're catching a falling knife at 3,800 or 3,400. Maybe. But do I think that in 2 to 5 years that we're back up to highs in gold at 5,600? Probably. And I would take that bet. I mean, that to me looks like more attractive than virtually any stock that I feel like I have no confidence in the markets going to all-time highs with stocks that is like, dude, who thought that Dell or IBM were going to be the companies going to all-time highs with 200% rips in 30 days? It's like,
I mean,
nobody.
I have to say, I think like some of the price action that we have seen, like that, like Dell, like all of the microns and things like that, it's feeling like nobody wants to say it, but at the same time, a lot of people are thinking it. That feels more like 1999 type of moves. Not that I was trading during that time, but just studying it, right? Studying the types of moves that were happening towards the end of the internet craze. And I know that a lot of people, I don't know if you've heard this theory, Chris, but one of the common responses to this is not a bubble because 1999 PE ratios were like 100 or whatever. I've heard like a really interesting take on it that I was curious your thoughts. If we are talking about a PE ratio based bubble, you're talking about the price of stocks going explosive relative to the earnings. But you can also just have an earnings based bubble in the sense that we know the circular financing stuff is going out of control. Like you have all these big companies feeding off of each other. They're passing money back and forth and putting it on their books as earnings.
Right.
And the reason I'm bringing this up is because that doesn't necessarily make the price to earnings ratio go up if the earnings look fantastic. But if the earnings themselves could be inspected and drawn scrutiny from, like if you could look at it and be like, hey, wait a second, if one of these things go down, they all go down because they all rely on each other. There's like this earnings based kind of bubble concept. I thought it was an interesting, it's not my idea. I was listening to someone go through it in detail, but it did make me think. It's like, okay, yes, these companies have significant earnings, but if they're just the earnings of each other, is there genuinely some concern there? And so for me, you mentioned a little bit of the rotation trade. I kind of am more in the camp of thinking I'm not willing to short the market or bet against this stuff.
Right.
But I do like the idea of staying diversified, spread out, watching the precious metals, maybe playing some of the unloved sectors on pullbacks, etc. But I do think that there is concern there. You also have this IPO kind of train wreck, in my opinion, potential. Not saying I know what's going to happen, but the train wreck potential of like, hey, everyone's going to just get, whether they like it or not, everyone's going to buy SpaceX because they're going to put it in the S&P 500 and the Nasdaq and all that. And that is concerning because suddenly you have a situation where forced buying into people's 401ks at a $2 trillion valuation, it does make me a little bit nervous. Like I do think that is bubbly type conversations.
Yeah, and that's, I think that was a big contributor to why we had like the late stages of a 1999 to 2000 crash, was because basically Wall Street got out on a lot of the crazy stuff while the retail community was left to be bag holders. So a couple interesting stats on this like mega IPO territory. I have another one that shows for the last 15 years some really big names, some of the big IPOs that came out. The average drawdown, Nick, so this is showing 1 year forward returns negative 28.4% average. Here's a crazier stat. Some of the IPOs we've had in the last 15 years, like Facebook and Alibaba, and now what we're about to see with SpaceX, Anthropic, and OpenAI. And these aren't all coming like now. It's like SpaceX is Friday. OpenAI, I believe, just filed for something in the next maybe 60 to 90 days. But give me a number. What's the number of like the drawdown in a 1 year from IPO and 1 year forward? What's the drawdown average for a lot of those IPOs? Do you know?
Specifically for like certain size companies, like what
any of the like the highly anticipated IPOs?
I'm going to guess 35.
55.
55. Okay.
55% average. Let me see if I can just find the I'll find the screenshot here. Yep, here it is. Let me get the picture. So I'll tell you exactly what I'm gonna do with SpaceX. I think I have to throw some money at it because I think it's highly anticipated, and you know, it's going to be, hey, look, I'll throw $500 at it or $1,000 and see if we get like a 20% move. Because if we do, great, easy, you know, easy money, if you will, if I wanted to throw it out there. But that's $1,000, and I'm also saying if it goes against me, that's $1,000 that I'm just like every other fool buying the top of IPO, and then it dips. So here's the zoom in. Sorry, the font's a little too small, but 30 major IPOs the past 15 years, and look at the average. The average 1 year drawdown, 55%. Now it's not all negative. It's like, but the drawdown is negative, but the, you know, 1 month, 3 months, 6 months. I mean, they some of them just had like open and rips. I mean, CoreWeave 3 months in was up 300%. Palantir 3 months in was up 164%. So the huge ones, Twilio 125%. So that makes the averages like, oh well, you know, the average move is 20% 3 months. Okay, well, that's because you have these monsters out there. But it's like, look, if SpaceX became that monster, it's, I mean, is it a 1.75 to $2 trillion company able to go? I mean, do you know how much insanity it would be to have a $2 trillion market cap go 100% or 150%? I mean, I don't think that's the law of large number stuff. I don't think that's what happens. I feel like if SpaceX was to go 20% or 30%, I feel like that'd be a banger IPO if it came out and moved, you know, 20-30%.
Chris, here's my my don't take me seriously guess on how I think the IPO will go, because I don't know for certain, and I just want to preface that to listeners who are maybe newer to this stuff. I will not personally be touching the SpaceX IPO, though I don't really have a choice. Let me explain. It's going to be so impactful to markets that it's going to impact everybody. If you're touching anything Nasdaq, ES,
very true.
It's
passive flows. They're going to get it. Yeah, passive flows will still have exposure to it.
Yeah. So I may not be trading the specific, you know, ticker, but it is going to impact everything from a more so than anything, not just the mechanics of the valuation, but I would argue the sentiment around these sorts of things will set a very important precedent in 2026. It's been a quiet couple of years for IPOs, so now it's waking up. The market's going to be very eager to see how that is responded to. Okay, so this is Snapchat back in 2017, and it was an IPO that when I was very new to this stuff, this is 2017, it's a long time ago, and I hadn't really traded a ton of stocks, but I was watching stocks, I was learning about them, I had been investing, trading, figuring stuff out. I remember being very excited about the Snapchat IPO. There was a ton of excitement around Snapchat. It was going to be the competitor to Facebook. It's going to game change everything. People like sharing images. Anyways, Snapchat's IPO, I remember the day that it IPO'd, watching it just absolutely rocket. Like it went just straight up. And I was like, oh my gosh, this was just easy money. I knew it, right? It went 20% up in the first week. Yeah. And then it proceeded to drop by about 80% in the following years in what was otherwise actually a pretty good bull market environment. 2017, 2018 into 2019.
Yeah, there's a melt up.
Pretty hospitable. Yeah, it was a hospital, fertile crescent for stocks. And yet still the IPO was so hyped, and insiders probably took the opportunity to sell out of the stock. Granted, what happened next? Well, IPO went poorly in the first, 2-3 years, but then the stock absolutely exploded in the future. So, and then of course crashed again. So
I personally have some Snapchat at about $6 a share. So I'm just sitting in there like for the last how many years? And it was, I mean, I'm trying to think when I bought Snapchat, it might've been probably post COVID. It would have been like the 2020, we get down into the garbage in 2022. It's like, all right, this thing's $5. It was 80 at one point. And I'm like, all the kids use it. My nephews still use it. Like
risk reward.
Kids in college still use Snapchat. It's like, it's out there. They just have somehow not found the way to monetize it. The market just doesn't give a crap about it anymore.
Well, and I think the long story short for me is just, okay, the big winners on this scenario were people that, built the company, owned the company, had investors, had employees that had stakes in the company, and they sold the stock and they made their profit. And ultimately investors who might have played it in the 2021 run up. I mean, this name was unbelievable during that run up in 2021. I mean, you're talking about, just for context, that's a 780% gain or whatever. So
feels pretty good.
Point being, very volatile. The SpaceX thing, I think, could go either way. You could have monster initial moves higher and then a fade over the next 6 months, or maybe not. Maybe it's different in the sense that it is so integral to the AI story that it is immediately adopted in, just like a Microsoft, Nvidia, all the current publicly traded ones are sort of, maybe it just gets thrown in with the group, but tough to say.
Yeah, so my concern with SpaceX, because it's been in the private equity space for so long, and private equity is getting a bad rap, but private equity, nobody gives it credit for basically saving us through the great financial crisis and saving us through COVID. Because what happens was in 2008, when bank lending became super, super strict because of the shenanigans that banks are doing with subprime mortgages, private credit ballooned to what the monster that it is today with $3 to $4 trillion. And because it was this, well, I can't get the loan from a bank, but I can get it from this company. And it's like, so people needed the runway for cash, and they were getting it privately. And yes, there's going to be risk premiums, and you don't have to go mark to market. You can basically like price out leverage and private equity. You can be told you're going to be whole at X amount of returns. Private equity takes her 2 and 20. And it's become like the in the background circular financing, just like we're seeing right now. My concern is that SpaceX has been in the private equity space long enough that 60, 75, 90 days out from this IPO, and if we do the same type of thing with OpenAI, I do have some legitimate concerns that there could be a top coming sooner than later, but it's not immediate. I don't think the top is like, oh, this is the top, Nick, we're starting to deleverage now. I think it's going to be like more volatility to the upside, maybe a bigger like distribution pattern, or maybe the blowout top that seems like we just maybe saw a bit of a taste of that blowout top. But I still don't think this is like the bubble that everyone says, and mainly because earnings are still reasonably solid. We had like 80% of companies beat earnings. But if we start to see that 90 days from now, the markets look like they're on like choppy waters, and 90 days from now, it's like, are we getting closer to the midterms? What happens during midterms? Does Trump company lose the majority? And if so, does that mean that we're going to start throttling back policies and this deregulation and the big beautiful bill and all these things are going to just be completely repealed? I don't know, but it's like, that's the type of risk and the tail risk I think exist. It's like, I just think once the private equity holders are made whole and they want to sell at 60, 75, 90 days out, and they want to put that into the public markets, they're going to be made whole like 10 to 20x their money. And the retail crowd is going to be left like, if they're still frothing at SpaceX IPO, they might bid it up. But I mean, retail's rarely left to be like the smartest traders in the room. I mean, yes, we've been rewarded because we buy the dip like fools. But on a day like, right now it's like these bigger swings are coming because retail isn't happy just doing the underlying. Retail's trading options like crazy, or retail's trading leveraged options like crazy, like a leverage ETF or leverage whatever, because there are more ETFs available now than publicly traded stocks.
Sure.
So that's why we're getting such massive swings, and whether it's up or down, it's moving, aggressively both ways. And I still think that Wall Street is going to have its fun where they'll get out of trouble. And Wall Street's going to survive always, and the retail crowd is going to be like, "Oh fudge, we were the bag holders at the top." So I do have concerns that we're heading into a really turbulent time ahead. Even little Tom Lee has said how rocky things could be in the next this summer, expecting some turbulence, expecting some pullbacks and whatnot. But dude, even today's reading, like the tape I'm reading today, it's like it's all over the place. Inflation. I was really surprised yesterday felt like a front run of inflation. But there's just a lot on the table. But here's what I'll say ultimately is, like, I'm still kind of a permanent bull in the markets always, is that unless we have permanent, consistent, and persistent bad news, it's hard for the market to stay beat down forever. So, we're seeing a couple of pullbacks here. That's understandable from a 9-week bull market, right? A 9-week rally. But
let me show you a visual chart just to go along with your point here. A second ago, you pointed out this concept of strong earnings. Here's our earnings heat map we've been playing around with.
Yeah, perfect.
85% of the ones we track. Now we don't have thousands of stocks in here, but we have like the big ones, right? Like I think it's like top 150 stocks, plus some small ones that specific users have really requested. But anyways, a lot of our stocks are beating. Like at the end of the day, on the longer term, this could be very frustrating because, Chris, I think if you've watched markets in the last few months, and specifically you trade NQ, ES, etc., you've probably been frustrated to see every other market respond appropriately, I would argue, to the Iran stuff, except for Nasdaq ES. Well, here's your answer. Here's the difference. Stocks trade on earnings too. They don't just trade on macroeconomics. And so you have stocks as a collective group beating their earnings pretty tremendously. And so, yes, while you have had, a shock to interest rates, you have had inflation expectations ramping higher, oil staying elevated above 90 for the last few months, several for the majority of the time, you have had a sharp correction in many assets reflecting it. The dollar has been strong. Gold and silver have responded appropriately. I know that might trigger some people because people are like, hey, war should make these things go up. Well, not necessarily. They bow down to interest rates, and interest rates are rocketing higher here.
Yep.
And so you have the story here. I also just want to touch on my precious metals outlook here for 1 second further on this. I know I'm currently short silver and gold, but I too am over the longer term pretty much a perma bull with precious metals. So let me express that at any point that I choose to short, commodities like this, gold and silver, it is truly in the name short. It is not a forever. It is not a long term. It is a short term, educated guess that I think, inflation rising, yields rising, dollar strength, strong economic readings that we've recently had, and an upbeat jobs report. I think that's generally going to send silver and gold lower. That has been the correct call in the short term, but it's never more than like a 3-month outlook. Never for me over a 12-month span. I can never think of a time in my trading history where over a 12-month span, I thought gold and silver were going to be lower than where they currently traded with precision, even at the all-time highs. Again, hindsight 2020, but even at this point, I still would have said probably sideways or higher 12 months from now.
Right.
And so going off of that thesis, would it not be then fair to say, well, now you're getting a 26% discount if you still think that, longer term, you might have some really nice potential gains in the precious metals. So my opinion, longer term, there's some good buying opportunities there.
I agree. And I will be at the bottom accumulating. I'll still be accumulating. Dude, I'm really happy for you with what's going on with your trailing stop losses. Hope they keep doing well. Not too well though. I want to get you stopped out at some point so that accumulation starts kicking in. I'm not feeling like I'm taking on a ton of pain with my my naked puts and ratio spreads.
Right. Well, hopefully we get the chance to load up on some good precious metals at low prices. Are you doing more silver? Or are you doing more gold stuff?
Right now I'm probably more silver because I'm in more of like the AI side of silver, like if that's going to catch a bid, but I mean the AI narrative right now is like, well, it needs like a little fluff, if you will. The AI needs to kind of come back in a positive light because it's like, oh crap, there it is. Semiconductors are the top. I was looking at, so my chart is the 1 month correlation, which we were down here. This was screaming sell off, by the way. When this is a horizontal line at 8. When that value is 8 and this COR1M goes to 8, this is one of those tools that I use for timing the market. I wasn't terribly surprised. So what I did, obviously I wish I just straight up shorted the market, but I did buy puts on MES. So micro futures, it's like a $400, $400 in puts that it's up, like it's 100% up right now. But I wanted to see, like, if we have a, move down to 7,000, that's probably going to be like $500. It turns into like 2 or 3 grand. I'm also synthetically long the VIX at 17. If we have a summer 2024 VIX to 60, if we have a Liberation Day, VIX to 60, I'll turn $500 into probably 2 or 3 grand. So I'm looking for some short-term plays if we are going to see some more near-term pain. But I mean, SpaceX is right here on Friday. So I just look, man, the next 30 to 60 days, manage risk. I am trying to, lighten up on some of the exposure overall. I'm picking my battles. The VIX is high enough that I have been selling some premium. And a lot of it's back down to like the March lows. I'm hoping the market's going to be resilient enough to not necessarily take that out. Here's the one pattern that would scare me. And we've talked about this a little bit, but the one pattern that would scare me would be, let's say that this little unraveling is going to be that severe. Now, some traders look at that as like, I told you this is the top, but I mean, Nick, would you be surprised? And I know that my charts are ugly. Don't believe me, I know, but that's what happens when you can see through all this crap. That is a pattern. And so every bear loads up to the downside. and we see like, puts are at crazy highs. The leverage ETFs, the inverse ETFs become at record highs. And I think that we just go the other way, and we possibly even go all the way back to highs again.
Yeah.
Like that would be fun for nobody except for a trader that sees a pattern like that coming.
Right. It is a possibility, especially with the index being so tech heavy. If you lose something in the tech story. Chris, we're out of time. We got to throw the show over, and I know you got to get moving too. So thank you for coming on as always, and we'll see you on the next one.
Yeah, I'll see you tomorrow morning.
See you, man.
All right, bye.
Guys, up next, we have Alan Perez taking over the stream, talking his trading setups. He's watching the dollar. I know we're also kind of keyed in on this inflation report, so he'll be going over more of that here with us today in the audience. If you guys are enjoying, make sure to hit the thumbs up button, subscribe, all that good stuff. And also just a quick reminder, if you're interested in getting access to the trade alerts being shared by myself, Chris Pulver, Marco and Ivan, etc., you can join us inside of our VIP Discord. It is currently 40% off. Stream viewers, however, get 45% off if you message in using the link that just got dropped in the live stream chat there down below. So join us inside of the group. You get access to every signal shared, entries, exits, analysis, etc., from our team of verified traders. With that said, up next, Alan Perez. Stay tuned. Don't go anywhere. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Good evening, good afternoon, wherever you guys are watching. Like Nick said, although CPI is now behind us, stick around because this is where we actually get active here, start making trade ideas, all that good stuff. If you guys have any charts that you guys want me to go over, go ahead and put that into the chat below, and I will do my best to go ahead and address that. But this is where we get active, and let's go ahead and dissect this CPI report and see how we can trade on it, right? So we are getting a softer dollar today, and the CPI report came in mostly in line with expectations, right? Let me go ahead and look at the numbers here exactly to give you that information. For those that are just tuning in, CPI previously was at 3.8%. It expected to come in at 4.2%, and it did come in at 4.2%. So it did elevate from previous numbers. It came in line with expectations, so that's why you're seeing a somewhat muted response from the market. And then the core CPI, similar situation. The previous was 2.8, came in at 2.9% with the analyst, and it actually printed at 2.9. So we have an inline CPI report. So what does that mean for me, and how do I plan to trade on that? Well, my current thesis still stands, and we are getting a little bit of a softer dollar, but I'm still going to continue participating in the dollar long trade until it no longer works. So, and also too, I will mention that we do have some developments in the Middle East that are not looking quite well. So that's also going to add more fuel to the dollar. We all know that the dollar has acted as a safe haven in this whole war. So you have elevated inflation, the war still going on, and you have yields elevated here today. You have the 10-year yield up here slightly in the green, the 30 as well, and the 2-year yield slightly in the red there today. So we'll go ahead and see how that develops. But I'm thinking that today we are going to see a continuation for the dollar strength. So what does that look like? Well, I'm in two positions here. I am in euro dollar short, right? So I am looking to go ahead and continue and hold on to this trade. I think that the CPI report today went ahead and confirmed that my thesis is correct. So just looking here at my FTMO prop firm account here, 200K account, I am currently in the green about $377. So still slightly within entry there. So it's, for those that are looking to also participate into the trade, I think this is a good risk reward. I have my stop loss right above this recent level of resistance here. This was one support. So I'm actually going to switch this to resistance here. You can see that this was support here for a brief period of time. Now we broke into it. We retested into the zone, now acting as resistance. So I do like this trade a lot. Again, this is all defined risk and not financial advice, but this is the trade that I'm currently taking. And I'm looking to go ahead and target 1.15 would be a good level here, or 1.145. So we'll go ahead and see how that plays out. But again, I'm looking to go ahead and participate and still ride the wave on this dollar strength. And I think that euro dollar is a very, very good choice to do so. If I also go to our tool here, the Edge Finder, this is one of the tools that I use all the time for my trading, for my decision making, for implementing fundamentals into my trading. You still see that the US dollar is getting a very bullish reading, so that's still intact. You also scroll down here to the bottom and you have basically everything against the dollar getting a bearish reading. So you have the euro dollar getting a bearish reading of -8, which is good for me, right? Because I'm short euro. Aussie dollars getting a bearish reading. You have bonds getting a bearish reading, which that's actually good for the dollar, because if bonds are going down, yields go up, right? They have that inverse relationship. You have Kiwi dollar as well getting a very bearish reading of -10, and pound dollar, which I know a lot of people here in the A1 trading community are trading the pounds to the short side. Congratulations to you guys. It's getting a very bearish reading of -10. So all looks good. Nothing has changed there. As the new data gets inputted into the algorithm, I think that the US dollar is still going to be showing that very bearish reading. So all looks good right there. So also, too, one thing that I like to see as well from a sentiment standpoint, just to kind of see, right? Because usually you want to take the opposite side of retail. You can see here that some players or the retail crowd is mostly short the dollar. Like if you look at dollar CAD, you have 79% of them short the dollar. If you have USD JPY, 74% are short the dollar. Now, once you get into like euro and pound and Aussie, they're pretty much mixed there at 50-50, but you're getting a good read here that a lot of the retail crowd is actually short the dollar. And so usually the retail crowd is wrong. And so you want to take a contrarian position against that. So that's looking good there. And again, you have the US, which is firing on essentially all cylinders, right? You have strong growth. If we remember last week, we had manufacturing PMIs beat expectations, services PMIs beat expectations. The labor market is in good shape. And so that, that Friday sell-off that we saw here, if we go to the Nasdaq, let's go ahead and pivot into equities here. If you go into the Nasdaq, right, you see this big red candle that was on Friday. That was essentially because the jobs report came out good. And a lot of people were confused, like, why is the market, including the president? The president posted a thing on Truth Social saying, why is the market selling off on good jobs report? Well, the jobs report confirmed that the Fed can raise interest rates if they need to, right? Because they have a dual mandate, maximum employment and stable prices. And if we reflect on the later part of 2025, the labor market was a big concern for the Fed, right? They wanted to address the inflation, but then the labor market was also kind of wonky. Well, now this come around, the labor market is taking care of itself, so they can kind of let that do its thing and target inflation aggressively if they need to. Now, this CPI report that we got today confirmed that inflation is still elevated. So we know that the Fed can raise interest rates. And now the CPI report right here reflected that they probably will raise interest rates, right? So you have probabilities. If we go to CME Fed Watch tool, I would assume that the probabilities are still for a rate hike in 2026. So let's go to probabilities here. You can see here that, yep, December 2026, you have a chance that the market is pricing in rate hikes. So that's going to go ahead and pressure equities. It's going to pressure metals as well. It's going to pressure anything risk related, I would say. Bitcoin, higher yields across the globe will pressure Bitcoin. And the dollar is going to get stronger. So I'm going to continue with that trade there. As far as the Nasdaq, I'm going to let this thing do its thing. I'm not going to short it, but I'm also not going to buy it. I'm just going to wait for a meaningful dip there for longer term swing trade opportunities. And I think you're getting a broader rotation out of AI and more into other sectors of the market. So that's my thoughts there on equities. Now for the metals, right? A lot of people are looking at gold. A lot of people are looking at silver. I am bearish on the metals right now. You have higher yields, higher interest rates. That is not good for metals, right? So you are seeing a very important level that I've actually was kind of quite wrong on this. I said that I think this level of 4,400 is a very strong level of support, and I think that I could hold. Now, that idea was contingent on yields lower, the war ending, things like that, and we haven't got that, right? So we actually didn't really hold into this level for quite too long. It's only been fourth day here. On the fourth day today, we are now breaking below that level. So you're getting some pressure on the metals. So this level of support here is not going to hold. And as Paul Tudor Jones once said, nothing good ever happens below that 200-day moving average. And you are right below that 200-day moving average there on gold. So looking to actively, I'm not going to be shorting gold. I'm going to be shorting silver instead. And in fact, if I go to my prop firm account PNL, you can see here that I am short silver as well. I have my stop above that 200-day moving average. I am currently 15 buckaroonies into the profit there. And I'm going to be targeting somewhere within $60, $56, anywhere within this level right here, this bottom end of this range here. I'm looking to target on silver. And then from there, we'll go ahead and see what happens, right? We have this wedge here. We'll see if we break out to the downside or to the upside. But for now, I'm going to be targeting the bottom end of the range. And I'm looking to continue holding on to this trade as long as we have stronger dollar, stronger yields, elevated oil, all that good stuff. So that is kind of my thoughts there on the market, my good read there. So to summarize for anyone that has just joined the chat, I'm pretty strong on the dollar. I'm going to short metals. I'm going to also short Bitcoin if I get a pop. I haven't gotten a pop on Bitcoin, so a little bit frustrating there, but I'm super happy with my current positions at the moment. And so I'm going to be patient, right? I'm going to be patient. If I get the pop in Bitcoin, fine, I'll take it. But if not, I'm also not going to rush the trade and chase the price. So that's kind of my thoughts there. I know my pound dollar people in the chat there, I'm probably, looking to actively participate as well. You're getting some kind of a pullback in the pound. So maybe this is that chance. Marco, hello.
Hello. I'm sorry, I'm having some difficulties putting my my picture in the stream, but you can hear me, right?
I can hear you. Let's see. James is not
James
here.
is out, unfortunately.
Okay. Let's see.
But you can continue talking, and I'll do a fix in the background.
Okay, let me see. Is this it? Nope.
I think we have to do this.
Do that one.
Yeah.
There you go.
Okay.
Perfect.
Okay.
All right.
Awesome.
Cool.
Yeah. Got the fix.
Yeah. I'm not a good producer. Marco, you actually have more experience than I do on these side of things. So thank you for being here.
I used StreamYard for my streams before, so I know a little bit about it, but I'm still getting around all of the host switching. But anyways, we're not producers, we're traders, so let's focus on that.
Simo said that you're in the metaverse, man.
In the metaverse.
I know we were talking about that yesterday.
Yeah, we were talking.
Did you just come back out of your pod? You're back in the reality?
Yeah, I just removed the AI glasses, and now I'm back in the real world.
Good to have you back, man. Good to have you back.
Nice to see you as well. So CPI print today, what do you think?
Yeah, it came in line with expectations. So you're not really seeing a volatile reaction, though you are still elevated from the previous prints. So I take that as strong for the dollar.
Yep. I have the same conclusion. So, I mean, we did print as the forecast, but again, the number is definitely higher than the previous number. And I think the Fed is starting to think about it, and they're starting to ask the question, well, if the Strait of Hormuz remains closed, the thing is just the inflation will just keep on printing higher, and then eventually it'll taper off but stay at the really elevated levels. So like above 4%, that's 2% above target. Of course, we know that the new target is 3%, not 2%, but that's still 1% then above the new target, which is still a problem. And especially with a good jobs market, not hiking, I think, would be just illogical. And I think the Fed is logical. So I think Trump is illogical in some aspects, but I think the Fed is still a logical committee of 12 members, no matter if Warsh wants to cut and pick the most dovish measure of inflation that he can. So, but what's your take? So can the Fed steer away from their usual spiel of balancing growth and inflation?
It's interesting. You have a new Fed chair. I don't know how he's going to react, but I do think similar to you, where they probably take the stance of, if you want to tame this and not let it run too hot without you intervening or doing something about it, I think at least one rate hike is probably the best bet.
Yep.
And I think too, other countries, other major economies are on that same boat as well. So it's not like the US is going to be this outlier crazy guy hiking interest rates. A lot of people are on that same boat, and they have vocalized that they're willing to do what it takes to tame that inflation. So I don't think it's necessarily bad. I think it's very possible. And I think now the markets are starting to realize that, because I think that the market was actually front running the idea that the war is going to end very, very soon, no matter what, eventually, and that interest rates were going to be staying flat at the base case. And now that's not the case. Now their whole front run idea is starting to become challenged a little bit, and they're starting to realize that, okay, the Fed has the green light to go ahead and hike those interest rates because the labor market's taking care of itself. So that dual mandate, that labor side of things, is taking care of itself. Now the CPI report today confirms that inflation is trending in the wrong direction and that they probably should hike those interest rates.
Yeah, and I think the U.S. is actually one of the rare countries that actually has a good jobs market. So if you look at Canada, if you look at the UK, the unemployment is not doing well. New Zealand, another example. So the employment is bad, which means hiking is an added risk. But with the US, employment is so high and so strong that hiking wouldn't really hurt the employment numbers much. So I actually do think we get a bit of a dovish wash. So I think it either goes neutral or dovish, but it's all about the dot plot, as I mentioned. So it's all about the 12 members. What will they vote on? Not what will Kevin do. And then, of course, what you can do is you can look at what every individual member thinks. So far, I think you have 3 hawks, so 3 confirmed hawks, and you have 3 of them who are right on the line of being neutral to hawkish. Powell is one of them. So Powell is usually the guy that tips the scale. You also have Waller, I believe, and you need at least 6 to get a hike. And then, of course, I think you need Waller to Waller. If it's 6-6, then Waller can sort of swing it left or right. So you need at least 6, and then we can talk about a potential hike.
Yeah, I agree with you. Marco, let's go ahead and do something a little bit different here. We have fresh CPI, and I see that the viewers are coming in here. So I want to make sure that we address all of the charts. And we actually got quite a few chart requests during my segment when I was solo. But I wanted to wait on for you to join me because I very value your opinion on these charts. So let's go ahead and do top down and just kind of address what the chat's kind of requesting here. We'll start off with equities because I'm seeing some Nasdaq 100, some Russell in the chat from Russo or from 2. We'll go ahead and go through that as well. We are seeing some currency pairs as well, like Euro JPY. I know you're kind of dabbling into Euro Swiss as well, I believe. So we'll go ahead and hit all those. The UK 100 is on that list as well. So let's go ahead and do top down equities. I'll go ahead and start with the US market, and then maybe you can go ahead and transition into the foreign equities if that's okay with you.
Sure, let's do it.
All right. So Nasdaq here, personal thoughts. I'll give you my thoughts, and then I'd love to hear your thing. We're obviously seeing a negative reaction today from inflation report coming in elevated from before. So I do think that the Nasdaq has room to pull back. But I'm also open to the idea that there's probably just a rotation coming out of AI. You have a lot of big names coming into the market, like these IPOs that we've talked on for this week. And I think that the market's actually rotating out of Nasdaq into like S&P 500 and to the Russell, things like that. Like, look at the Russell here, relative outperformance here compared to the Nasdaq. So I like to see that. So that kind of puts me in the framework of like maybe not being so doom and gloom and like the world's going to end and there's going to be a big recession. But I do think that you're seeing some kind of a healthy rotation. Marco, your thoughts on that?
I would say that unfortunately the sell-off, if it happens, will happen on most of the equities, but the Nasdaq is going to suffer the most. And you have 3 IPOs, big IPOs coming potentially this year. So SpaceX this Friday, I think. Then you have OpenAI, which is Scam Altman, and then you have Anthropic as well. So you have 3 big names in artificial intelligence dumping their bags on the retail, which is usually the sign of a market top. Like if you looked at periods in the past in history, usually when IPOs are clustered together, they come out right near the big top of that specific industry. In this case, that would be artificial intelligence, because there's no big money left that wants to get in. If you have big money, you're not going to be buying IPOs. You'll be buying before the IPOs happen. So this is going to be pure retail demand, which may be there, may not be there. So I think a larger sell-off is more likely to happen than a move back to all-time highs. The Nasdaq suffers the most. Do I think you're safe in the S&P and or the Russell? Not sure. So my game plan would be to, of course, look for the 200 EMA to see if we can maybe get an entry near the 200. On the NAS, if you can just put the NAS back.
Sure.
Since you have the charts already. So 2600, I think, is a good level, coincides with the 200 EMA. That's probably going to be the first level that I try and take a stab at it. I would love an edge finder confirmation as well, which right now Edgefinder is neutral, and I think for a good reason. And it all goes well with the rate hike story. So could this market survive a rate hike? Well, it absolutely could, but most of the sort of confluences are bearish, in my opinion. We already mentioned 3 massive reasons why equities will sell off. I'm not sure of any bullish reason. If you have one, well, let me know.
I mean, I think it's some pretty valid, strong forces in either direction, and I like how you said that. Like, I think that you said essentially, everything will sell off, but the Nasdaq will probably be felt the most. I think you have, which we've said this before, but like it's not going to last forever, or it usually doesn't last forever. Where you have, on the bull case, you have this shiny object, this AI, super productive, and earnings are just beating expectations. But then, how long does that last? On the other end, you have higher yields, interest rate pressure, all that good stuff. So that's, very two polarizing opposites. They're kind of fighting each other. I like that 200-day moving average as well, right up with that 26,000 level on the Nasdaq. A pullback into there would open my eyes to a potential buy the dip. However, at that point, you have to, consider, what is the Fed doing? Are they just raising one time, or are they in a rate hike cycle? That could definitely go ahead and change that outlook, and that 26,000 floor could just fall like paper, and then it can just fall right through, and then you're trading a whole different environment than we are right now. Moving into like the foreign equity, because I know you dabble into them and about them more than I do. UK 100, the FTSE, the Nikkei, I know is something as well. Do you think that broader sell-off in this global rate hike cycle that we're in, or potential global rate hike cycle, would affect those more than the US? What are your thoughts on that?
So for the Nasdaq, I also wanted to mention, I kind of forgot what I wanted to mention. So let's move on to the Nikkei.
All right. If it comes back, it comes back.
If it comes back, I'll mention it. But talking about the Nikkei, I think the correlations are there. Absolutely. So if you get a sell-off on the Nas, it could spill into everything, including the Nikkei. I mean, it's already happening. Like the Nasdaq is pulling back, I think 5%. Nikkei is following and has a massive red candle on the daily chart. So I don't think that the Nikkei could survive and stay bullish or stay neutral during a Nasdaq sell-off. But the sell-off on the Nikkei may be smaller, more brief, let's say, and the Nikkei could be a better opportunity to try and take a stab long sooner than, let's say, the Nasdaq, because the Nasdaq will for sure experience that sort of bubble-like movement where there's a massive explosion up and then there's a massive correction down, like you had, for example, in gold, in silver, and in Bitcoin. So those are the 3 latest examples of bubble-type movements on the daily chart. So if I'm going to be bearish on equities, I'm going to be bearish on all of them, which is sort of my approach. What about you? Would you be happy to take a stab on the Nikkei while being, let's say, bearish on the Nas or neutral on the Nas?
Not really, Marco, and it's more so just because of my lack of experience, like really honing into the macro and the landscape of like, the Nikkei and everything like that. Me being in the US, I pay a heavy attention to US macro, and also just at a high level other economies as well, but don't have experiencing trading the Nikkei, so I really wouldn't do that. I would probably be more focused on the US.
Okay. And one cool thing that I recently read, so the new Market Wizards book is out. I'm not sure if you've seen that. My favorite trading series out of all of them is the Market Wizards, and the new book came out. So in that book, the first trader that they interviewed made, so in 10 years, he went from $5,000 to 100 million.
Oh, wow.
So in one account, trading stocks, so small caps, medium caps, large caps. And he mentioned his main indicator, he keeps things super simple, but his main indicator of a bear market or a bull market is the 10 and the 20 EMA. So if the 10 crosses the 20 and both of them start pointing down, that's usually the time where he says this is a bear market. I'm going to focus on, let's say, selling equities, or I'll have a bias that is bearish on equities. And right now, that's exactly what's starting to happen. So the 10 EMA is starting to cross the 20, which could be another bearish sign. I mean, that guy has really a lot of chart time and a lot of experience in the markets. So yeah. And also one cool thing. Sorry, go ahead.
No. Go ahead. I was going to piggyback off of that.
I just wanted to mention what's funny is one of the traders in the book is Jason Berry, who runs Positive Equity, which is a trading company here in Croatia. And I actually did an internship at his company, and I worked with him briefly. So it's pretty cool, like that I worked with a guy that's now in the Market Wizards book. So I thought that was pretty cool when I saw it.
That is actually pretty neat, man. That's a cool experience, I'm sure. Speaking of those moving averages or key ones, Paul Tudor Jones says nothing good ever happens below that 200-day moving average.
Okay. Yep.
For the most part, equities are above that, so it's looking good there. But if you go to the metals, Marco, 200-day moving average right here in yellow. Gold is now right below it, trading aggressively lower. Silver as well. What are your thoughts on that? Do you think that the support is no longer in and it is now a bear market from here? I have my personal thoughts. I personally think that for as long as you have this higher interest rate environment and the potential for higher interest rates to come, I think that these are under pressure. You are now decisively below this level of support that I've been raving about for a long time, where you have this level of support and the 200-day moving average right there. You're now there below it. I'm thinking I'm pretty bearish on the metals. How about you?
I'm the same. So gold is acting as a risk-off asset. It's following the Nasdaq to the downside, not to the upside, unfortunately, but to the downside. And because I believe that higher rates are coming, because I'm bearish on the Nas and stock market in general at the moment, I'm bearish on gold, especially now that we broke a key level. I got stopped out of my long position. We're below the 200 EMA. There's a lack of interest, I'm guessing, in gold. So I think we go lower. I think we could hit 3,800, 36. But more than that, I think we can just consolidate. So I think this could be very, very boring for the rest of this year. And it wouldn't be the first time. I mean, if you go back on the weekly chart, you would notice that gold has had periods of just doing nothing. And I mean nothing for months and years. So this is a good example right there. So I think this could easily happen again, where you get 3, 4, 5 years of just nowhere of so just flat price action or maybe slight downside or slight upside, which is tough to trade. That's pretty tough to trade and much harder to trade than what we had in 2025, which was every day we just went up. So it's a different market environment for sure.
I agree. I think this thing, I don't think it's going to be a straight move down, but I think it's just a continuation of what we've already seen before, especially since the beginning of the war, where you have like these drops and just a slow grind lower there. And I like the targets that you said. So 3,800. I'm also looking at 3,400 as well. I think that's some really great value for even just like a longer term position trade. Doesn't have to be an intraday trade or anything like that, but a longer term starting to accumulate responsibly there on gold. I would be very open to that.
Yep. So you're short on silver, right?
Yes, short on silver. I'm up $26 on this, and I'm targeting essentially this level of support here. So if I put this here, it's essentially two zones. I'm open to either or, but horizontal level here. If I go like this to this recent like leg lower, which is pretty close to where price is at right now, about 60. That's where I'm looking to target there. So something like this. Or if you kind of zoom out here on silver, you can see here that you have like this wedge. So if we were to touch somewhere within the bottom end of this wedge here, I'm also open to go ahead and just target that and then take my profits and then see where we go from there. Whether if it's a breakdown lower, then of course I can just wait for like a break and retest, or there's also a possibility that by then maybe the rate story changes or anything, you find some support coincidentally, and then you trade higher.
I do like this position, especially now that we broke the 200. So I think this is pretty good. So essentially, you're selling EU, you're selling silver, and did you get into Bitcoin?
Not into Bitcoin. I really would like to. However, I just haven't had the opportunity from a technical perspective to go ahead and enter that position. So we've been bouncing in here at support. So there's two ways I could go about it. I don't want to go prematurely just because you're still within this range and you don't have that technical confirmation. But ideally, a pullback into this level and then short it to 50,000. Or if you get a breakout and retest of here and then short it to 50,000, either way, I'm kind of looking for that target of 50K. I just want that technical confirmation. And then if I go to the Edge Finder too, I'm not quite sure what the score is there for Bitcoin. Let me verify this real quick here. Bitcoin, maybe it's not getting anything. Let's see. Bitcoin, I think I just saw it here on my screen. It's getting a neutral reading.
Yeah.
So yeah, it's still, you're not getting that technical confirmation, neither that Edge Finder confirmation. So no trade for me there, but I am open to, go ahead and short that if I get the opportunity. Another cool thing that's coming up here for Bitcoin story is Japan. They're looking to go ahead and raise their interest rates in the next meeting to 1%. And we know how Bitcoin has reacted before in the past to higher yields in Japan. Usually these big sell-offs here come off the backs of higher Japan yields, essentially the unwind in Bitcoin, that arbitrage opportunity where you can take cheap money and park it into that higher yielding asset, Bitcoin. I think it become under pressure as well. Another leg to the downside if you do get that, Bank of Japan go ahead and raise interest rates. So we'll go ahead and see how that develops. But yeah, it's something on my watch list, but I don't have the green light yet, so I'm not going to touch it.
Okay, nice. And I remembered what I wanted to mention. So it's basically the quotes report on the Edge Finder for the S&P and the Nas, which is pointing that basically the institutions are selling stocks. So, and the retail, I think, is actually buying. So that's a great contrarian indicator right there. So if you go to quotes data history, and if you look at the Nas, so this is exactly it. For the viewers, this is the yellow line that we're looking at. It's pointing lower, which means that the institutions are reducing their exposure to stocks, which coincides with our opinion as well. I mean, it's starting to look too much like a top, and all of the confluences for me personally are starting to point bearish. The reading I've been doing on the topic from veteran traders, they're bearish. So they're saying, be careful. Don't buy too much if you want to buy. We're staying out. We're on the sidelines. Some of them are even selling. So I think that whole story is pointing that something similar will happen as to what happened with silver at the end of 2025.
I like this chart specifically a lot, Marco, and thank you for bringing that back up to my attention. But it tells a clear message, right? Whether you're a doom and gloom and you think that institutions are just offloading and there's a recession to come, you can clearly see that the money is being pulled out of the Nasdaq. Or you could be more optimistic and say that you're just seeing a broader rotation out of AI and tech into the broader market. Nonetheless, the reasoning for that, you're still seeing that trend to the downside, money being pulled out of the Nasdaq. And so you can't really fight that data. And so to Marco's point there, if you were to see some broader selling or a sell-off, I think the Nasdaq will be the one that would probably bleed the most. Looking at the S&P 500, I want to say it is the same. Yeah, I mean, it's kind of flat there. But again, if you look at the recent data, they are also starting to pull out some money out of there as well.
Yep, absolutely.
All right. Well, Marco, I'll go ahead and pivot out here, man. I'm over here in my segment. We'll talk tomorrow on Thursday, and then we have some IPOs towards the ender part of the week. So very excited for that.
Absolutely. Thank you, Alan, very much. This was, again, super fun. I'm looking forward to tomorrow, and good luck.
All right, man. See ya.
Yep. See you. Goodbye. Okay. I wanted to mention the sponsor of the today's stream, which is Ola Prime. So if you're looking to expand your trading capital, if you're looking to get funded, Ola Prime is a great candidate. Now, the code A1 Live gets you 35% off. And what I like about Ola is that they're swing trader friendly. So I'm a swing trader. I usually hold positions for 1, 2, 3, maybe days or 1 week, maybe even a month. And what troubles me is the consistency rule that some prop firms have, and Ola Prime offers account types that don't have the consistency rules. So that's why I like Ola. They're an emerging prop firm, but I think they're very competitive alongside FTMO, which is the top prop firm in the game. On top of all of that, with the code A1 Live, you get a really, really good price. So you get 35% off, which is very tough to beat. I think out of all of the good prop firms, and there's like 4 I can count on my hand, this one has the best price. Okay, so check it out. The link is in the description, and use the code A1 Live. Let me see some comments right there. Market Wizards books are really great. Highly recommend everyone reads them. So absolutely, so they're awesome. My favorite books on the topic of trading, alongside of Alpha Trader. Alpha Trader is amazing as well. Alpha Trader 2 is coming out at the end of this month. I think it's called Trading Outside the Box. So check it out. CAD rate decision in 15 minutes. Really? Let me see. So you are correct. You are correct. Let me see. I have a position on GU, which is not really working out so far. So inflation print came out as expected, which I do like. It does fit the trade because it went up from the previous number. Previous number 3.8, and the actual number is 4.2. So it definitely went up. But the market seems to be selling the dollar at the moment, which markets do what markets do. My win rate is only around 45 to 50%. So half of my trades will end up being losses, but it's part of the game. It's fine. And this can, of course, still turn. What I'm personally betting at is more of a longer term direction. I'm betting that the Fed event next week goes hawkish. I'm betting that the dot plot turns out hawkish. So I think that could produce more momentum for dollar longs or GU shorts. I think we also have a good or an important print for the GBP on Friday. We have the GDP at 8 a.m. in the morning my time. So that will be very important. And now we will get the BOC rate statement, which will most likely stay the same. What is more important is the press conference for the CAD. Now, the CAD, I definitely would like to sell it. So USD CAD, I would like to go ahead and buy USD CAD. Okay, let me just lock this. So if we can hit the 20 MA, possibly buying USD CAD, I think it could be a smart decision. Long term, the CAD is getting bad data, and we seem to have bounced off this level of resistance. So yeah, we seem to have bounced off of that level. What I'm mostly referring to is the economic data, labor, unemployment. You look at the CAD. So the latest print was okay, but it's still highly elevated. I mean, we were at 5.75 in 2024. Now we're at 6.6. I would say that is still a big problem, and I would say that's still overall bearish for the CAD, especially if they're looking to hike, if they're looking to be hawkish. If we look at the central bank rate forecasts, we go to the Bank of Canada. They're definitely on a path to hike. So by the end of 2026, we should get one rate hike, I believe. Yeah, basically. So one rate hike. With the current economy, can they allow themselves to hike? Not sure. So I'm bearish on the CAD. As far as the watch list goes, so I have the GU position. I have USD JPY, which is slowly approaching the 161 level, where I will look to sell on a possible intervention. So that could be a good trade right there. And I still have the Nikkei. So I still have the Nikkei. I would like to get a top setups reading there on the Nikkei. So right now it's neutral with a score of -1. I would love to get a bullish score right there. So a bullish print on the Nikkei. This is a good level to buy, absolutely. I'm worried about the correlation, so I'm starting to become bearish on the Nas, bearish on stocks. The whole sort of story with stocks is getting bearish. The Nikkei is gonna fall because the correlation is there. If you get a risk-off event, if you get stocks selling off, it will transfer in pretty much all of the equities. So it already did. If you look at the Nas, which is sort of the leader right now. So if you look at the Nas, look at this drop 5th of June. Look at the Nikkei. 6th of June. Okay, so I think this chart is a bit messed up, but it happened at the same time. So high correlation, which means I'm going to think about it. But if the edge finder did give me a bullish print, I would try and take a stab at it. So because I don't have a bullish print here, I have to be neutral. I have to be more patient. And that's it for the watch list at the moment. It's not really filled with a lot of stuff. That is because I'm waiting it out a bit. So we got the NFP, we got the CPI. NFP was really good. CPI was on the dot, but still highly elevated. So if you look at the edge finder, let's see if it updated. Inflation, check this out. This is going to be the last thing before I pass the stream. So 4.2%. I mean, look at this uptrend. If the Strait of Hormuz remains closed, if the conflict with Iran remains, this thing is going to go up and it is going to stay elevated. It can go up to, I don't know, 4.5%, absolutely, and stay elevated, which is way, way, way above target. So I think that is a big problem that the Fed is going to have to think about. That's it from me. Don't forget, if you want to get funded, Ola Prime is 35% off with the code A1 Live. I wish you good luck in the markets. You can catch me tomorrow. I'll be streaming, or I'm streaming every single day this week. And don't go anywhere because you have James coming on right after me. So thank you. See you in the next one. Goodbye.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello, hello. Happy Sunday. Not Sunday, what am I talking about? Happy Wednesday. God, get my days wrong. How's everyone doing? Hope everyone's good. Hope you're all having a good start to your weeks. It's Wednesday hump day, halfway through the week already. So I'm not really in too much at the moment. I think we've already discussed everything I'm in last week. Not much has changed. So I'm currently short on the Aussie New Zealand. I've been in this position for quite some time now. So I took this on the 22nd of May. But yeah, it's not really done too much. Initially moved against me. We did have a stop loss up here. That's been reduced now down to the high over there. Or the previous high, I should say. We pulled back actually perfectly into the fib. If you draw the fib from the previous high to the low, it pulled back right to entry, right into the fib, and we've seen another rejection to the downside. So technically speaking, I really can't complain about that one. I'm currently short on euro dollar as well. I took a position yesterday right on the 50% retracement, and it was a beautiful entry at the time. You know, it was tapped in and then rejection straight away. However, we had data come out today, CPI for the US, and yeah, it's knocked it off a little bit, but it's all good. I'm still really in favor of dollar long, so if this position doesn't work out, it's cool. I'll go in again at a better price. Nice trim. Thank you very much, Simon. Yeah, I'm good. Can't complain. Just relaxing. Still in Sunday? Yeah, I am. Yeah. So I'm also long on the HK50. So this is the Hong Kong index, like the S&P, but for Hong Kong. So yeah, looking to buy this one at weekly lows, also weekly high over there. So we'll see how this one goes. It's not my trade. It's from one of my traders in my Discord. And I'm also short on dollar yen, and that's it. So the dollar yen trade is not really a dollar trade. It's more just speculation on what the MOF is going to do. If they intervene, fantastic. If they don't, it's cool. I'll get stopped out. I don't really mind either way. But yeah, just a little bit of a gamble. If it works out, that's great. If not, as I said, it's fine. So yeah, there's not that much going on. Dollar CAD could be coming into an entry. It really depends on how you view the dollar at the moment. Let's just do a hard refresh and see if the edge finder is reloaded now with the updated data, or the new data, I should say. It has done. It's dropped from a 9 to an 8. It was 9 before. So either way, even though we got not fantastic data, I'm sure Nick's already ran through it with you and Chris and everyone, but in my opinion, it was a net negative because we didn't have anything that beat forecast to the upside. So inflation really didn't do much. We had some month on month that came to the downside slightly by 0.1, but it was really lackluster, to be honest. So it doesn't change my bias. So I'm still bullish on the dollar. Still happy to stay in the dollar longs and euro dollar. Quite happily get back into pound dollar. Quite like New Zealand dollar. I really like the Australian dollar, US dollar as well. So yeah, I think the idea really is to, in my opinion, stay long, not financial advice. And same thing kind of goes with the indices markets, obviously the opposite, and say the same. I think this would be more an opportunity to actually fade this move. So again, not financial advice, is all my opinion. So rather than now going, oh, we've had, cooler inflation, which is kind of true, but I just don't think it's impactful enough to really mean anything. Let's buy the S&P. I personally think it might be an idea to actually go down smaller timeframes and look to fade it. So we'll see. I could be very wrong. By Friday, we could be at new all-time highs. So don't take it too literally, but yeah, I just don't think the landscape has really changed enough for any major bias changes. Hi, Hames. Any idea on euro strength ahead of the rate hike? What do you mean, Jose? The rate hike's already priced in. It's not new data, so it doesn't really matter. What matters is how much they hike by, which I would expect just 25 basis points, and then also the forward guidance. Bashi, hello, good to see you. But yeah, I don't think that the euro is necessarily going to be rallying, because again, everyone expects the ECB to hike rates. It's priced into the market. Remember, the market moves on, but basically surprises like what we saw today. Inflation didn't really do anything, but the only real thing we did get was that we had a slight tick to the downside based on, from actual to forecast. So that's kind of it. Right. Let's see. What else do we have going on? So dollar CAD. Wait, hold on. I actually wanted to check the heat map for the US and completely forgot. So 77.8. What is the date? The 10th. So it doesn't look like we have got. Okay. So either way, it doesn't really matter, does it? So US dollar, I still stand very bullish. I think the move we've had to the downside here is temporary. I think we're fully going to correct and continue higher. So I made a video actually not long ago talking about this. I think we've kind of got two opportunities or two base cases here. So either the dollar comes down, retests these previous highs on the H1, and then bounces off and continues higher from there, or we just completely ignore today. I just don't think it's that big of a deal. Anyway, I don't want to keep harping on about the same thing. Hi James, idea on euro strength ahead of rate hike, could have opportunities to short it. It depends what against. You have an opportunity to short anything, but what's the where's the relative strength? Wally, hello. Do you see any reversal in gold? No, absolutely not. Thoughts on pound Aussie, euro Aussie? Yeah, we can take a look at those. We always have two cases, either price goes up or down. Don't complicate things. That's not true. If you take a 90-year-old woman's idea of what a financial market is, she would say it goes up or down. So, I think it's a bit of a naive way to think about it. Do I see a reversal in gold? No, I just don't think we're in any landscape for gold to really outperform. I think short term, yes, we could see some pullbacks, but longer term, when I say longer term, I mean sort of intraday sort of swing ideas, I think we're still heading lower. So on the daily, we've broken below our 200 moving average. The last time that we broke below was in 2023 down here. So either it could be a similar situation where it's a bit of a fake out, but obviously this was still during quite a large rally, or the start of this really large rally on gold. We don't really have the same landscape. So I would say that, yeah, gold and silver go lower from here, with obviously, again, the opportunities of pullbacks in the meantime. But yeah, just to get back onto that message about don't complicate things. it's again easy to say that, but when you have hundreds of dollars, thousands of dollars, even just $20, and you've got to make a decision: is the market going up? Is it going down? Why is it going to do that? You kind of got to some extent complicate it, because you have to understand what you're doing. So, you know, if you sit and say, oh, it can go up or down, don't overcomplicate it. You just put some money in the market, 9 times out of 10, you're just going to lose and you're going to fail. So again, bit of a redundant point. Any thoughts on pound and euro Aussie? Yes. So I'm looking to go long on specifically euro Aussie, because we do have the hikes coming. Again, they are priced in, but I do think the euro has more opportunity to be a buyer than the pound. I just think, you know, I've said it a million times, so I'm not going to go on about it today, but I just don't like the UK. I don't think it has really much going for it. So I don't want to be a buyer. I don't want to hold sterling in my portfolio. I'd rather hold the euro. However, upside, I think, would be due for both. But then again, it's a case of which one do I want to buy more? Well, I'd rather buy euro Aussie or pound Aussie. So we've had what I wanted to see. So if you have been tuning in for the last week-ish, week and a half, you'll know I've been talking about pound Aussie printing a higher high from these previous highs here, then having some sort of pullback. We've had the moving averages cross as well here. So that just indicates we're out of this H4 bearish trend. We're now technically in a bullish trend. We printed a higher high. So now I just need to see the higher low get printed, and then I can be a buyer. So I really like that idea. But again, it's just really a case of waiting at the moment. Oh, it was a joke? Okay, my bad, Grey Fox. Maybe I took it too seriously then. But, you know, it's hard to detect sarcasm through messages, so fair enough. Hi, James. Like you did in USD JPY, I did something similar in Swiss yen, entered it last week for, yes, we've also got a couple of other people in my community that go shorts on CAD yen, Swiss yen, dollar yen, so on and so on. The problem I've got is a little bit of, I don't even know what the word is, but you know, when people expect something and it just doesn't happen. So it's become, you know, everyone knows that, you know, it's sort of 160 to, you know, 160.5, let's say. This is like intervention zone. So is it now going to be a case of people are starting to stack short and nothing's going to happen? And then it ends up just being, you know, essentially a short squeeze. And then we go higher and then we get the intervention and we're all sat there and we've just lost a bag trying to be smart. Maybe. And that's the annoying thing. You don't know what they're going to do. You don't know when they're going to do it, and you don't know the size. So it's really a shot in the dark. The best we can do is guess, unfortunately, or at least base an educated guess on what's happened previously, which is what I'm doing in this situation. Again, I don't have much money on the line, so I don't really care if it works or doesn't. If it does, again, I'll be very happy. If not, move on. Hello, you have any thoughts on uranium? No, I do not. You couldn't have asked me a more difficult question, apart from if it was something like algebra. No, I don't know anything about uranium and stocks and mining and things. I know a little bit about silver and copper. That's about the extent of my, you know, knowledge outside of just typical sort of CFD and futures. In fact, I wouldn't even really say futures. Hi, James. What are your thoughts on pound CAD? Both are not great. I would say the pound is stronger than the Canadian dollar at the moment. However, I also think the Canadian dollar is significantly, I can't think of a PG word, but not worth buying. So Canada's economic heat map actually isn't too bad. Let me just quickly check my notes on something. Just bear with me for one moment. Yeah, so the loonie faces material uncertainty from the formal USMCA review negotiations that began May 25th in Mexico City with breakup, review and renegotiation on table. Strong US-made payrolls and ISM data support the broader North American growth backdrop, but the outcome of USMCA talks will determine H2 export volume trajectories and tariff risks. Progress on sector-specific tariff reductions and the timeline for revised deals, immediate catalyst, in terms of central bank, we don't really have much going on with the Bank of Canada. Maybe there's about a 50-50 chance of a hike by the Bank of Canada in December. And then March 27, again, about a 50-50 chance. But other than that, we've got nothing going on. So based on that and the central bank, I think the Bank of England might have a little bit more room to hike rates compared to the Bank of Canada. But yeah, either way, I just don't think there's really much here. So based on my very loose and very brief research there, I think it's very simple, sort of just to buy the trend or follow the trend, I should say. So obviously high, lower high, higher low, higher high, higher low, and then it would be a case of waiting for the next higher high and then entering on the pullback and continuation higher. I think that's kind of the easiest way to go about it. But again, I don't really have much. It's not a market I'm paying attention to. I don't think we've got anything on the edge finder. No, we don't. So no pound CAD either here. So personally, I'd be sitting on the sidelines. Don't jinx it. Yeah, well, let's try not to jinx it. That would be a good idea, wouldn't it? So Australian dollar Swiss is bearish. Yeah, there's not really much going on. I'm just trying to think. So I think what I would want to do from here is go short metals. So unfortunately, I'm really late to the party. I've completely fumbled the bag. So my thought process really was I didn't want to sell silver. I didn't really want to sell gold either, just because I like them. I like metals. So it was like a more just stubbornness in hindsight. It was a mistake on my part by not going short, because I did miss out on a lot of money if I could have just taken the position, followed the plan and kept my bias out of it. But I didn't do that. So I think either I'm a bit late and now it's too late anyway, or we could be looking for some sort of pullback. I think a pullback is warranted. We are seeing a little bit of dollar weakness today. We could see some sort of pullback towards 61.8. That would also allow price a little bit closer to the 200 moving average. And obviously pull back into the fib, retesting these levels. It would be a break, retest. It would be technically very nice. I think fundamentally supported quite well as well. And then on the daily time frame, we've got some pretty nice targets we could look for. So either the previous low here, I think, will be sort of the first level of major support that we're about to hit. And then if we end up breaking that, then the next level really is about 54. So there's quite a nice clear room here to the downside. But again, I'm a little bit cautious. I may have missed the move, so I don't want to FOMO into the position. So I'm happy to just stay on the sidelines temporarily. And gold has broken, as we already discussed, has broken its 200 daily moving average already, which is a little bit concerning. So I think, yeah, base case here is possibly a little bit of a rejection and pullback off this previous low at, let's say, 4,100, and then a continuation lower. So maybe something like this, I think, is kind of base case. And then when it comes to the markets like the Nasdaq, the S&P, I think I would quite like to go short. It kind of depends. I'm not ready to pull the trigger yet, but I think if we can see another rejection off this level and close back below the 200 moving average, close back below the support level, then I could start looking for some short positions to continue lower back into the previous all-time highs, which are around here. Same idea goes for the S&P, not just the Nasdaq. And then, yeah, I mean, we could also, go into the SpaceX IPO ideas and all those types of things. They're 4 times oversubscribed now. And I just got a message off Pepperstone saying that they've extended their, they're extending their time frame for you to get in early, as they say. I don't know. I just don't think it's going to end well. So I'm a little bit cautious on that one. So I don't really want to be buying. So I think it just more feeds into possibly shorting it. But yeah, it's kind of it from my side. Let me just take a quick look at the schedule. Okay, we've got Tiger coming on in about 10 minutes. So if there's any chart requests, let me know. If not, I can keep rambling. That's all good. So US dollar, let's see what's going on lower time frame wise. Seems like we are getting a bit of a correction here. Nothing major, but I mean, we didn't have any major to the downside anyway. But yeah, I still am very much in favor of the dollar revisiting sort of 105 to 110 potentially. So start correcting this to start with, and then potentially coming back up to its previous high, around 110. I think it's pretty sensible. I just don't really see any catalysts or any factors that warrant the dollar coming back down to the, we could come back down to the previous lows, but I don't really see anything that would drive it significantly lower than that. So yeah, my idea right now is for the dollar to continue higher, and the current dips are just better opportunity to get in. So like Aussie US dollar, I really like this one. I need to redraw the fib actually. It's tricky because on this one, would you consider this the high here? Or would you consider it here? Or would you consider it here? I think I really like it here just because it lines up with this previous structure, but I'm not sure if that's really correct. Daily time frame looks fine. So actually, yeah, maybe it's okay. I'm sort of thinking out loud here. Okay. So Aussie US dollar, if we could see a pullback into this level, obviously retesting the previous support here, we've had the break, retest, and then also have a correction of the aggressive candles we've had here, these sort of impulse candles. I think that's reasonable. That would also bring it back towards its 200 moving average, which would be technically, again, a really nice corrective type move. And that would, be very solid. And that would feed into not just the idea of dollar bullishness, but also Australian dollar weakness. I'm already expressing that through the Australian dollar New Zealand short, but I don't think the Australian dollar has much steam left. I think there's a lot of retail that are still hanging on to the idea of Australian dollar strength, which is fine. I think there are some aspects that do warrant being bullish, but I just think that the bearish factors are stronger than the bullish factors. Obviously, you could always find something positive and negatives, but you've got to weigh up which one is more dominant and which one is worth trading. So yeah, I think Australian dollar is due for further downside, to be honest with you. The COT position is still quite stretched. I think we've still got some unwinding to do. And yeah, we've got the central bank aspect and things that we've been talking about over the past, 2 weeks. So yeah. Bitcoin, right? Let's see what's going on here. Oh yeah, I forgot I did this. I didn't actually post this, but I thought it was quite amusing, and I forgot to get rid of it. So El Salvador, I'm not sure the full story, so I'm not going to try and over-explain it because it's not something I'm overly knowledgeable on. But I think, and this is a big I think, when El Salvador cleaned up, a lot of like the gang activity and all that type of cartel-y type things, they seized a lot of crypto. I'm fairly sure they put it into basically the country's Bitcoin fund. I remember the prime minister or president posted this screenshot on Twitter on October the 25th, and I was just thinking, it must be very stressful running a country with 700 million in Bitcoin, and it's since then dropped 50%, or give or take 50%. Anyway, that's not part of the stream, but that's the story behind why that's on my chart, because I thought it was interesting. Anyway, Bitcoin is still really struggling, and it doesn't seem to really have any support left. Technically, I suppose it does. We've got the previous highs, previous lows here, and maybe, we could double bottom at this point and continue higher. But I don't know. I think if we were going to see this level get respected in continuations, I think that would have happened by now. I don't think that this is a time where Bitcoin is now going to, rocket. I think this is more a case, actually, Bitcoin is going to break, potentially retest, and continue lower. Now, obviously, don't take the arrow literally. I'm not sure about like 30 or 20K, but I think 50, maybe 40, I think is reasonable. So we'll see, because I think we spoke about this maybe last week, and I was saying that there is a lot of depression around crypto in general, not just Bitcoin, but like the small caps and the altcoins and whatever else there is in the crypto sphere. It could be potentially like a reverse top signal. When silver was rallying, we had everyone and their grandmothers buying silver, whether it's physical or ETF or whatever it may have been, and then within a week it crashed 30-40%. It could be like the opposite thing, where everyone is getting so depressed about crypto at the minute, and we're at quite a significant level of support. It actually could be a bit of a bottoming signal that maybe we could have a run to the upside. That's purely speculation. I have no idea. I'm not a crypto trader, so I always want to give that disclaimer, because I don't want anyone to take that and start buying crypto aggressively because some guy on YouTube said something. Okay. Anyway, crude. I am tempted to buy some oil. Actually, I'm not doing it yet, but I wouldn't mind being a buyer at this level. So basically just playing the market behavior here. We come down, we bounce, we come down, we bounce, down, we bounce, down, we bounce, and then are we gonna have another bounce here? I think that's quite likely. Just playing basically a range trade, but obviously on a higher time frame. I'm also not really seeing much optimism around the straightforward moves, so I think it's quite a safe play, really. Well, hold on, I probably shouldn't say safe play, but I think it's quite a reasonable idea, really, to buy the bottoms and potentially actually sell the tops as well, and just try to trade the range until it breaks. Right. I don't think I don't think there's much else at all. Let's see, what do we have here? I've not done, actually. We've not checked latest COT. I know you guys probably have, but I haven't. So the Dow has seen inflow, which is interesting. So they bought the Dow. Well, obviously last week they bought the Dow. They sold the Nasdaq and they sold the S&P, which is a bit odd. Normally, when we see large buying or large selling of some sort of, whether it's the Dow, the S&P, some sort of indices market, normally they will buy collectively, not all, not the same quantity all the time, but if they buy the Dow, normally there'll be some sort of buying in the Nasdaq or some sort of buying in the S&P. It seems quite deviated this time. Gold, obviously, I think gold is in quite an interesting position. Someone's just asked for gold. I've already covered gold twice, so I'm not going to give you a full rundown again. But yeah, I think from a metals aspect, you've got to, at this time, define what type of trader you are. If you're more of a long-term trader and you've got a bit more bankroll and you can afford to take some drawdown, some long-term drawdown, I think it might be worth being a buyer. Again, not financial advice, in my opinion. So like silver, for example, but obviously we're on gold, so we'll talk about gold. If you're really long-term bullish and you think gold still has a lot of way up, you're still in the idea, you're in the idea that currencies are just losing value and et cetera, et cetera. Gold could be an idea of just buying lows and waiting for the next rally that looks like this in gold. Not saying that's 100% going to happen, but obviously it's all down to your own analysis there. So I think that's more of like what the big players are doing. It's not really a case of dump gold, like we need to get rid of gold. It's more a case of, okay, short term, we might sell positions in gold, but we still want to accumulate for some long-term holdings. Again, I'm purely speculating here, but I think that's kind of the situation we're in at the minute. Retest of the lower. Yes, I also agree with that, AR. I think we are going to see a retest of the low here, correction back to this previous support level, come and meet the 200, and then a continuation lower from there. It's odd because, for the past, 2 years that I've been doing these streams, maybe a year and a half, give or take, I'm not sure exactly how long I've been doing these, it's really just been a case of how do we buy gold? And it wasn't even a question of, what direction is it? And it was just, we need to just wait for the pullback. Yeah, that's really all it was. And now it's a case of, obviously the complete opposite, where there is nothing really to drive buying of gold other than, again, long-term speculation. But I think short-term for us active traders, us degenerates, it's just short this market, really. Right. I think I've said right about 20 times. Aussie New Zealand continues to run lower. I really like this trade. And I'll be honest, if this does end up working out, I think I might have to crown this trade best trade of my career, or at least one of them. So yeah, I don't think there's much to really discuss other than the fact that it is negative swap. So it's quite an expensive market. It's quite an expensive trade to just hold, which is a bit frustrating, but as long as it's moving with me, as long as the trade's in profit, it's just a cost of business. It's okay. Euro dollar seems to be fading a little bit. Let's just see. Actually, no, it doesn't seem to be fading at all, but I don't think euro dollar's really got much room to run higher. I think worst case, we might come and correct this. And that would obviously it would either stop me out or come very close to stopping me out. In that case, it's okay. No problem whatsoever. I will take that loss like a man. I will eat it for breakfast and I will just get back in at a better price. Of course, I'm half joking there, but we will, I will quite happily continue to sell euro dollar until the fundamentals change, which is obviously Edgefinder in this case. Great channel. Thank you for your wisdom. No problem, Blue Brains. You will find lots of wisdom on the Trader Nick channel. Lots of great guests and videos and all sorts of stuff going on here. And giveaways. It's crazy. I don't ever talk about the giveaways here because I'm not affiliated. I don't want to speak where like out of turn or wrongly. But if you are here and you aren't a when I say this, I don't mean this in an offensive way. If you're not well backed financially, this channel probably is the best place for you because there's always giveaways and you know, competitions and stuff going on. It's fantastic for the community. So make sure you stick around here. Thoughts on Euro Swiss, Pound Swiss, Dollar Swiss longs and Swiss yen shorts. So your main play there then is Swiss short. So if in that case, we obviously need to just default to the Swiss fundamentals before we even look at the charts. I also don't have time to do that. So I'm going to take a very quick look at the Swiss, and then I'm going to have to hand over to Tiger, who may take over for you. So Swiss getting a very strong score at 71.43. So already the Pound Swiss and Euro Swiss may be out of the window, but Dollar Swiss potentially, if you are bullish on the dollar individually. But I think putting them all in a basket and just going short Swiss, I wouldn't say is the best idea right now. Anyway, ladies and gentlemen, I have to head off. It's time for Tiger to come and take over the show. Don't go anywhere. You're in great hands with him. Thank you for being here. Stay safe. Don't get margin called. And I'll see you all tomorrow.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
Hey, what's going on, everybody? Tiger here, on to close out the show. Hope you're having a wonderful hump day so far. We already had our inflation numbers come out, so we'll take a quick look at that, kind of do some comparing to the real wage growth, something that the administration's probably not too happy with. So we'll take a look at that. Paul Blue asks, what currency are you most bullish on right now? It really kind of depends on the angle you give it. Japan is clearly leading the way. If you're just isolating the fundamental analysis side of things, they're basically exceeding expectations on 4 out of 5 reports. If you throw in the sentiment, if you throw in a little bit of the technical view, if we just go isolate just the currencies themselves over here in the category section of the Edge Finder, which is an awesome feature Nick added of late, and you kind of look at it from just this point of view, you factor in, again, everything else. The dollar is just as strong as it gets right now. Obviously, it's been exceeding expectations overall on a lot of its data as well. We did have that neutral reading today on the CPI, which got rid of one blue box. If we isolate the heat map, which we'll look at in a second, but overall, the dollar index is still quite strong. So that would definitely be my strongest pick. I'm sure probably the rest of us guys probably would agree with that. I don't want to speak for anybody, but again, it's all about the data. And then if you're looking for the weakest currency overall, so far it looks like it's the Canada dollar. And then again, if we add in if we're just looking from a fundamental only perspective, it would be your Aussie dollar, because it's been exceeding expectations on the fewest percentage of those high impact economic calendar events. So just kind of depends on the angle you're looking at. Hope that makes sense for you there, Paul. Thanks for the donation, by the way. Yeah, speaking of the inflation data, of course, we did have, I didn't even refresh this one, get that updated. Yeah, the only thing we had, everything met expectations. So basically priced in. You had a little bit of a decline on the core CPI number for the month over month time frame, but other than that, that's about it, guys. CPI overall is one of those reports where of late it seems like they get pretty well correct a lot of the times. I kind of joke and make fun of the economists because they do miss these readings quite a bit, but when it comes to inflation, they're pretty well spot on. They only miss these things by like 0.1, 0.2% for the most part. But obviously, if we just take a look at the last few months, it's been on the rise. Okay, you still got some tariff issues going on there. Obviously, the war itself, the ceasefire that wasn't really a ceasefire because they've still been sending bombs out. But what I think that the administration is probably paying attention to is the fact that if you compare the CPI, which again we had a 4.2 today, and then the previous reading was 3.8, so the last 3 months have definitely been on the rise. So it's obviously good to a point for the currency. It's not so good for our stock markets here in the U.S. It's got that double-edged sword reaction when it comes to the assets we trade, the CPI. We always have to keep that in mind. But then you go and compare that 3.8, that 4.2 to the wage growth. And the previous reading for the first time was where we had a decline in real wage growth. So it was a negative 0.2%. And now, because of today's 4.2 reading, it's negative 0.8. So I guarantee you, President Trump, J.D. Vance, the administration, Scott Bessent, I guarantee you, and now Kevin Warsh, I guarantee you they're probably not too happy with that number, because this is one thing that they were touting pretty heavily during the early part of the administration up until this, the month of May, really. So it's negative real wage growth, not looking the greatest, guys. Okay. Especially when that's all you've been talking about ad nauseum for months. So anyway, that's a look at that. Getting back over to the top setups, guys. Overall, the really strong NFP report we had on Friday was good, but unfortunately for me, the way I trade, it's kind of pushed prices too far away from all the zones I want to trade. Okay, you had that pound dollar drop. I took my profits. But then when I take a look, because that's the bulk of what we basically have up here. Let me get rid of the currencies and add back in everything else over here real quick. Let's see, bullish. Get rid of the neutrals. There we go. Get our list back here. It's all about the dollar pairs. Dollar yen up top looks like we just lost dollar CAD, so it must have just went neutral. But pound dollar, Kiwi dollar, Aussie dollar, and euro dollar shorts. Problem is, price is too far away from all my zones. That's just kind of the reality of it. Kiwi dollar is probably the closest. It's not as far as everything else for the first supply zone I'm looking at. But I don't know that I'm really going to be excited about this one because it does have that congestion box off to the left, not too far away, like I mentioned to you guys previously. I think the better probability is going to be this zone structure up here. And that right there is about 100 pips away. So, again, still kind of a ways away, or maybe 90 pips. New Zealand dollar, I think, only moves about 55 pips or so a day. 56 pips. Okay, I was close. So that might as well be 100 pips on some of these other assets that move a lot more. But this is obviously one of my favorite assets, and these are my alerts over here, guys. That's why I pulled these up. Dollar CAD, which again just looked like it fell off the list. I'm kind of keeping an eye on this daily demand down here. There is a 2-hour zone kind of at the top of the daily I'm looking at. That one's also, I guess, not too far away, but I'm probably going to ignore this, especially now that it fell off the edge finder, at least for the time being, because it did just recently bounce into that higher time frame zone of demand, zone of supply that has already been mitigated, in all fairness. But I don't know if I want to risk buying something this close when that zone that could possibly do what it did the last couple of times. Okay, we got a really big drop after just barely wicking in the first time. Talk about the bottom falling out of price from this supply zone. Okay, It just barely wicked in and just completely dropped. Second time, came a little deeper, collected some more unfilled orders. Same thing, had a really big drop to the downside. So I don't know that I want to personally risk anything up in this area, up in the top section of this curve analysis, talking about the swing low down here, swing high up here. Okay. Do I want to buy in a premium zone? Not really. Just like I don't want to diddle in the middle either. But I especially don't want to be buying where prices are overall pretty pricey when we're taking a look at, again, the most recent swing structure. So probably going to look for a bigger discount on that, but I'll still keep an eye on it. I'll still keep an eye on this zone since we do kind of have slim pickings anyway. You know, I'll just keep monitoring the edge finder. I mean, at the end of the day, if we get a push through, like I drew up here, then that would probably be a little more tempting to take one of these zone structures down here. But until we get that, and until edge finder comes back to a bullish side, dollar CAD is officially off the list for now, but I'll still leave the alert there because I want to see if we break that structure. And as far as Aussie dollar, this is another one that's obviously bearish. Overall, overall, this thing's still got a pretty, well, I guess it's turned around enough for my taste. I mean, yeah, okay. So I guess it's good after all. I was just being a little extra picky on this one, but we did break through this zone of demand at the bottom that I was keeping my eyes on, which tells me there's probably going to be some underlying strength up here to the top side. This is the daily, of course, on the right. That's always the foundation, guys, where I start. And then, and then getting back over here to the left side where my 4-hour should be. You can see I've got a 2-hour zone here. Again, we're just a long ways away. Same thing with pound CAD, the one I made money on, okay? This one is still 03. Okay, so that one's about 50 pips away. That one's not too bad. It moves about 80 pips a day. So that might be a little more realistic. This is basically where the NFP result from Friday came out, guys, and we had that major dollar strength come out. So naturally for this pair, it sunk, took me to profit. And now I'm just considering trying to take, trying to jump back in, but it's going to require retracing that whole NFP move for me personally to be interested for this alert here at the 134.5 level. And as far as euro dollar, kind of a similar picture, although it's kind of being squeezed between a couple zones. So I would probably wait till we get a break and close below this, the rest of this daily demand over here that I was keeping my eyes on, because I don't want to be shorting right here, knowing that we just bounced into a major demand. It's just too close together. It's not really offering much of a reward risk ratio in the favor. Okay. If we would have broken through and closed below, then this is a different story. But because we didn't break and close and we just kind of bounced towards the bottom or the distal part of that zone and we started retracing, it's probably just going to make me think a little bit twice. Think twice about putting a position in. If anything, guys, I would definitely be decreasing my risk. Decrease my risk. I told you guys last week or the other day, I moved from 0.2% to 0.3%. So perhaps I go back to a 0.2% for a trade like this or a 0.15%. Just something to kind of get in the game. Okay. Something to get in the game because, again, I think it's just overall kind of slim pickings right now, especially if you're a diehard top setups fan like me. Guys, check out the Edge Finder if you don't. If you've never used this thing, it will change your trading life. Absolutely. And as far as Ola Prime, definitely check that out as well. 35% off the account of your choice. You got the QR code there on the screen. And guys, I did want to touch on, speaking of Ola Prime, just to kind of show you guys, when you get into any prop trading company, you buy a challenge account or a funded account or whatever the case is, trust me, I know it can be a frustrating mess trying to find the rules. I mean, dozens and dozens of different accounts I've tried finding the rules. They're often hard to find or they're buried. Would you guys agree? I'm sure some of you guys have done the same thing. They can be frustrating. So for Ola Prime, when you go to their website, you just simply select futures, Forex up here, whichever you're looking for. And then right here under plans, little drop down menu, you got your trading rules. Okay. This is the most important page for any prop trading firm you guys look for. And it shows your different account up top. Me personally, I've got a 2-step prime. This is the one I have. But you always want to go straight to the trading rules just to make sure what you are and are not allowed to do. Okay. because these percentages matter, daily loss, overall loss limit. Obviously, your profit targets 8 and 5% in my case for each phase, minimum trading days, all that kind of thing. And then how do you get paid? How the heck do you get paid? Well, that's where you're going to want to click on this reward and refund tab, and it's going to basically tell you the requirements for whatever account you're on. This one, for example, is a 7 profitable day within 30-day period. I personally have a monthly payment. That's the way I've got mine set up, or three day if you're doing a 14 period. So you definitely want to understand this stuff. You want to know what a profitable day is, quote unquote profitable day. You want to know, very, very importantly, what your consistency requirement is. It's 40% for this particular one. It's a lot better than a lot of them. Some of them offer 30%, 25%. So it just basically kind of, in a way, penalizes you when you for having a big winner relative to your overall profits. So you definitely want to know about that. And yeah, just all the things. So the whole reason I bring this up is just to say, hey, it's real simple to find the trading rules here. Again, it depends on the account. If you have an older account like me, there's even a tab here to take you back to the older rules, because they have actually gotten better in a lot of ways. So sorry to take so much time on that, but I did want to just show you guys that this is the most important thing when you're considering any trading firm, is to go find their trading rules right here, okay, without having to dig through a whole bunch of nonsense to find it. So anyway, that's that. Guys, let me know if you have any specific tickers in the chat that you would like me to check out. I've got a few, not a whole lot today, again, because price is just, quite frankly, just too far away from a lot of the zones I'm looking at. Do you think stocks will get liquidated for SpaceX, or is that phase 100% finished now? Well, I would leave that up to Nick to talk about the stock side of things. We don't really cover stocks on this page a whole lot, but yeah, it's definitely something to be aware of, because Friday is when that thing goes live. I think the ticker is SPCX. I think, you guys correct me if that's wrong, but I think that's what it's going to be. My mentor, when I went into my FX class, he basically said, be careful with IPOs because they almost always go down. And it takes a long time sometimes for them to get back to break even and actually start profiting. So just be careful with the whole IPO side of things for you guys that are on the stock side. And yeah, we always say these bits of care for you guys because we don't want you just here flash in the pan, try to be a champion, because they oftentimes lose their accounts. We want you here 5, 10, 20 years from now. So that's why we throw all the warnings out. That's why we sound like Debbie Downers at times. It's just for protection, because we've all seen it. We've all screwed up. We've all made mistakes, lost money, blown accounts, things of that nature. So yeah, utilize this as a wealth of knowledge for that. But yeah, I don't really have a say on that. I don't really dig too deep into the stock side of things, especially with IPOs. I just don't get into it. Bit choppy today. We'll hold off till tomorrow, and that's me though. Yeah, Tyler, that's fine. I'm sitting on my hands too. I got out of my short on Sunday, and I haven't had anything since. So I haven't made a trade. There's no rule saying we have to trade every single day. You just unfortunately see that all over YouTube and the excitement of trading and mashing buttons, mashing the buy button, the sell button. But the reality is, depending on which trade, there's just not always a trade, especially when you're a swing trader like me. I mean, I'm more of a shorter term swing trader. I'm in trades 1 to 5, 2 to 5 days, something like that. I might be lucky to have one great setup a week, right? One double A setup or grade A setup, however you want to classify that. So, but that's what works for me, especially with content creation. I have a lot of things I do, a lot of side projects I do. I can't really sit and do scalp trading or short-term intraday trading just because I've got a regular job like most of you guys probably do. So anyway, yeah, if it ain't there, just sit on your hands, read a book, read Market Wizards. I know Marco was mentioning that earlier. All those books are awesome. I used to do medical transport, guys, back when I was actually started studying trading. I was a medical transport driver. So Medicaid, Medicare, okay, they pay medical transportation for clients. And so they would pay us to take them to their appointments. So Me personally, I had a copy of Market Wizards, all three of them. I think it was three before this newest one Market was talking about. But yeah, anytime I'd be waiting on a dialysis patient or somebody getting a checkup or whatever, blood work drawn, I'd just whip out my book in my car and just try to read a chapter or two here and there. It really helps with your mindset. It's something I think is very necessary, especially for brand new people, especially for you younger traders coming out of high school, coming out of college. Okay. They teach you how to be an employee in college and school, but they don't teach you how to make money. So you kind of have to figure it out on your own. You can do that in the cracks of your day with some really good books like Market Wizards to understand what Paul Tudor Jones, what he's thinking, or some of these other gurus, some of these other just giant people in the space of trading. Understand their risk reward management. Understand all that stuff. Got to get the mindset right. Think the magic of thinking big. I mean, there's all kinds of really good books out there to help you think. We have to understand how to think in trading. Okay, we have to understand self-discipline. We have to understand what makes people tick. This is all about human behavior. Okay, a chart is a replication of traders' behaviors, the fear and the greed. Okay, so we just have to understand that so that we know how to build it into our trading strategy. Okay, as far as, let's see here, let's go back to, the Dow. So I wanted to go over the Dow because I know that's still on our list as well. So Dow, obviously, guys, these things, we kind of joke, they've been kind of bypassing the moon and going to Saturn and Pluto and Proxima Centauri and all that fun stuff. They're still overall pretty pricey. I mean, for me personally, I like to do my curve analysis from a swing low to a swing high to see how pricey an instrument is. And it really just kind of depends on the time frame you're looking at. Okay, me as a short-term swing trader, I'd be wanting to look at a swing low from way back here at the end of March to the current swing high. We're still pretty pricey, but it's all dictated off the time frame you're looking at. If you're a shorter-term day trader, okay, bring it a little closer to home. Go into a 4-hour chart, and maybe you could put your curve analysis starting point down here, swing high up here, and you'll see we're still diddling in the middle. We're still in the middle section right now. So where do we find our discounts? Well, for Dow, this is the one I've been watching for a couple weeks at this point, I guess. But yeah, I am still keeping an eye on this zone of demand over here. It is a basing structure, kind of a fat doji, if you will, a fat indecision candle. That did give us a strong leg out, left us a gap, broke a structure, broke another former structure, this blue dash line at the top, kept going and gave us pretty decent move and continued. So for me, as far as the U.S. indices go, the only real option I personally like is the Dow, is the one that is on EdgeFinder, because we do have at least a decent looking zone of demand here. And oh, by the way, there's a 50,000 psychological number rolling right through it. So that's a good thing. Guys, as always, not financial advice. Do your own due diligence, your research. Just take this stuff with a grain of salt or a sand or whatever you want to take. But do your own thing. But if you're asking me, my honest opinion, my thoughts and what I'm watching, it's going to be this 50,000 mark. But not because of the psychological number. That's just nothing more than just a little bit of an odds enhancer. Okay? That's just one little piece of data I like to take into consideration. 50 EMA is above my 200 EMA. That's good. And it's going to have to be forced to pierce the 200 EMA when it comes in. Because by the time price hopefully comes down there, gets to my point, my 200 EMA will continue moving a little further, and it's going to have to pierce the 200. I don't like to buy the 200 necessarily right at the 200 because a lot of people do that, and then they put their stop losses where? Right below, right? Stop losses down here. Sell orders, if they're trying to buy in this example. I want to see price go through and collect their liquidity and then go a little deeper to hit the unfilled orders before I personally buy, and then sell just ahead of overhead supply. I don't want any part of this supply zone up here if I'm trying to buy down here. So just a couple thoughts for you. Okay, a couple little odds enhancers I thought I'd throw out there. And then, yeah, again, the 50,000 psych number is obviously in the heart of that zone, which I just think it's a pretty good spot. But we got to be careful because the banks know that. And we got to make sure and sometimes give a little bit wider of a stop loss to take that into consideration. So don't ever, the whole stop loss game is a game changer, ladies and gents. And I've got the data to prove it just from my own trading results. On the most recent account I purchased back in June, I started getting a little too close with some of my stop losses, a little too tight, only for price to take me out and then go in my favor. So then I go do kind of a post-mortem, if you will, and realize, hey, if I wouldn't have been so strict on that 3-to-1 reward risk, maybe do a 2-to-1. There's at least 4 or 5 other wins I would have had in there. Perhaps I'll pull that out sometime for you guys, just to kind of go through that. But anyway, let me know, guys, if you have any other things you'd like to look at. I still do have about 6 minutes to go. Let's see. We went over. Let's go back over here. So we'll have a look at gold and silver. And they have temporarily fallen off the list, okay, as far as Edge Finder goes. And part of that is because of the sentiment analysis readings, guys. Having a look at the COT report, the most recent COT report, they actually increased gold by, I think, 6%. Yeah, 6% week to week. And plus, keep in mind, they're overall quite long to the tune of 87%. So we're sitting here trying to look at a short for gold because the fundamentals are screaming sell, but sentiment's not. The technicals are good. Technicals are giving us that, that downtrend for the time being. But the big banks have other plans. Again, 6% for gold, 1.5% for silver. And even when you start digging into the crowd sentiment, guys, the retail sentiment, look at the bottom. The average retail trader is 93%, 94% net short for gold. Silver's right there, 93% also. So that's not an extreme I can use. I can't use that as a contrarian signal because the contrarian signal would be buy. What about the put to call ratio? Well, go have a look at gold. There it is right there, actually. Look at that. The average retail trader is net short. We just saw that on the retail sentiment. Same thing in the options market. High put volume. It's just screaming higher. So that if anything, this is a contrarian buy signal. I can't utilize that for the strong bearish look we have in gold and silver right now. I just can't do it. So sentiment analysis is the only thing that's really holding us back over here, as evidenced by my neutral items over here, where we go and look at the bottom, find gold and silver. Again, -6 on gold for the fundamentals, very bearish, but a +4 on that in silver. They're basically the replicas on the sentiment, and then the technicals are agreeing with the downside. So it's all about the relationship of the smart money and the dumb money that is just currently not giving us a good vibe to the downside. Okay, so be careful if you're trying to trade gold and silver. I personally, when we're talking top setups, I personally put a whole lot of weight in the COT report. That's just me. Okay, that's just me. This is how I found Nick, was because of the sentiment analysis stuff I started digging into about 5 years ago. Okay, that's how I found him. And I was using his free retail sentiment on the A1 trading website because that was one of the teasers, if you will, to the Edge Finder. So I started using just that free piece alone for the retail sentiment, not even the COT report. And my trades already started to improve. So imagine what you can do if you guys don't have an Edge Finder and you can unlock all 16 of these economic categories over here. The couple sentiment, which is really 4 because we also have the put to call ratio, the AAII sentiment survey that comes out every Thursday as well. And then, of course, the technical readings, seasonality, and then the trend, which Nick does use a moving average crossover piece to that. So, guys, if you have it, okay, get you one. It will, again, change your trading life. Ladies and gents, as far as, let me double check the chat over here, see if I'm missing anything from you guys. Dollar, yeah, dollar is the clear winner. That's absolute fact. What is close, though? What is close to our bullish bearish list? Well, pound Aussie is. Dollar CAD, which fell off the list, is right there. Bitcoin is close. It just needs a technical reading to change. So we need some we need some structural breaks to the upside on Bitcoin. Let's look at that. Let's actually finish with Bitcoin, guys. Let's go look at the daily side of things. Yeah, that's exactly why, guys. Bitcoin is in a weird spot. So Bitcoin is in a strong downtrend ever since the middle of May. You guys would agree that's a pretty strong downtrend. But we have started bouncing in, and I know I mentioned this the other day, but it bears repeating. We bounced right back into that daily, weekly, monthly demand zone confluence. That has already been touched in all fairness, but we went just a little deeper this time and collected more unfilled orders from the daily, the weekly, and the monthly zones. And that's why it kind of stopped us in place. I don't want to get involved in this unless we start creating some higher highs and higher lows, okay? Which obviously is what Edge Finder is waiting on as well. So it'd be nice to buy into it, but then at the end of the day, we still have geopolitical nonsense and madness, messing with us. We obviously had an Apache helicopter go down yesterday, I believe it was, or maybe it was 2 days ago. The obvious response, as President Trump put it, to that. So there's just more of that flaring up. Again, ceasefire is pretty well gone, but he still somehow through it all sounds pretty optimistic. And so hopefully he has information nobody else has, because it looks pretty bleak to us. I'm sure you guys would all agree. But at the end of the day, hey, we're just traders. All we care about is price action, a little bit of geopolitics, the hard data from the numbers, and an alarm clock to tell me that I'm done. So ladies and gents, again, sorry, didn't really have a lot today because, again, it's just too far away from my prices. So hopefully something will change. Maybe we'll get some more items to look at tomorrow. Maybe some of these plus fours, minus fours. Maybe we can get some love from them and get some more ideas. Euro pound, I'd love to see that one go to bearish. But anyway, guys, take care. Have fun. Hope you learned something today. Stay safe. Again, sit on your hands unless something is screaming and passing all your rules. If it's not, sit on your hands. Just wait till tomorrow, just like the other gentleman did. Take care. Talk to you tomorrow, guys.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.